This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr on assignment today. Wow. John Tucker will be in for Mr. Barr. We'll have to see.
He's been in radio a while.
He's been on assignment looking at the congestion tax.
Yes, exactly.
John Tucker will be with us.
He rolled that
with
back.
News. Lisa Mateo, of course, always with us. We say good morning on a Tuesday. We've got a terrific lineup. Mike Wilson, Morgan Stanley will be. Who like Gajewski and Troy Gajewski will darken the door from FS Investors. That's chemical engineering 2 days in a row. It's too much.
That's tough.
Can't stand it. Francis Donald to figure out what the Montreal Canadiens should do. Christopher Whalen, he did a dog picture to me this weekend.
We got a lot of people coming in studio today.
A lot of people as well. One D Gura will drop by as we looked at the debate. So we're going to get right to it. We have a terrific mystery guest to start with this morning. We say good morning on Android Auto, Apple CarPlay, huge success there in 20 countries. It is safer, better around the world. Apple CarPlay building out. On YouTube, search and subscribe to Bloomberg Podcasts. Out on YouTube, it grows every day. I'm not on the chat yet. I'll get on the chat as well. We're in the Interactive Broker Studios with Futures Up 10. Our Bloomberg Business Flash. Here's Lisa Mateo.
You got it, and we've got some red on the green in the screen after the Dow rose in Monday trading, but big tech shares actually dragged the NASDAQ lower. Speaking of tech, Nvidia shares starting to gain some ground once again, up more than 2%. And this is after it extended that three-day rout yesterday, wiped out $430 billion in market value. That's the biggest three-day value loss for any company in history. Right now, we'll check in with NASDAQ futures, up 0.4%. We have S&P futures up 0.1%. Dow futures, little change, down about 8 points. Today, Wall Street waiting some fresh data. We have consumer confidence report coming out. Bloomberg Economics says, based on retail sales data, that it's probably fading. And then also on today's agenda, data on home prices. Over to the bond market, we have the 2-year yield, 4.73%. That's little changed. The yield on the 10-year, 4.22%, and that is little changed as well. We have shares of Microsoft down about 0.2%. Bloomberg reporting it risks a hefty EU fine after regulators accuse the company of abusing its market power by bundling those Teams video conferencing app into another business software. Apple shares, they're up nearly 1%. Sources telling Bloomberg the company turned down an AI partnership with Meta over concerns of its privacy practices months ago. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. So what you do, folks, you go to Paris. Of course, everybody's going there. The Olympics, Katie Greiffeld's taking Gus the horse. And, you go to Paris, you have a baguette and a French onion soup. Or if you're more sophisticated, you go to Brussels, where we have the cream of new garlic soup with Namur snails.
That sounds good.
Diving into that in the Grand Place in Brussels. Just back from Brussels in the trilateral meetings. Rebecca Patterson joins us with tours of duty at Bridgewater and Bessemer Trust. What was Brussels like? I've been there like 3 times, and to me, it's this enigma almost.
It's really the heart of Europe, if you will, because you have all the European policymakers coming there regularly to talk about how to lead Europe as an entity forward. And then, of course, you have NATO's headquarters. And we have the big NATO summit coming up in Washington, D.C. in early July to celebrate the 75th anniversary of the treaty signing, if I'm getting the date right.
What's important here with the Trilateral Commission?
Correct.
Trilateral Commission, and you spoke there. The level of panic in Brussels, it's not World War II, and it's not the day Putin invaded Ukraine, but what was the level of panic over the elections, and particularly in France?
I wouldn't say there was panic. I wouldn't use that word to describe the tone there. I would say that there is a lot of frustration that Europe is unable to implement a lot of the things they've agreed on. And it takes a long time to get 27 countries to agree on anything. And so they've agreed on banking union, on capital markets union. And those things are so important for European GDP to accelerate. The fact that you still have all these frictions doing business between France and Germany or Italy and Portugal, it slows down business, it slows down IPOs. The Capital Markets Union, they need to get more securitization to get a broader capital market that'll allow companies to borrow more easily and more cheaply. Until they can implement these things, it's going to be really hard for European stocks to outperform peers for a sustained period because they don't have that growth behind them. They know it. They know it. But without strong leadership, it's very hard to push the stuff through. And that takes us back to the French election. If we get to the second round of this election and we have what they call cohabitation, where you have one party in the Elysee and another party, fighting them all the time, you have paralysis in France, but you also have lack of leadership in Brussels. And that's their big worry, that they're just going to be stuck.
Where typically has that leadership for the European Union? Is it just Germany because they're the biggest economy, France because they're large as well? Where does the leadership really come from?
Yeah, I mean, historically, when you've had a strong Germany, strong France, ideally also a strong Italy, that trifecta could push stuff through. I think Europe, probably like most countries too, the most gains in policy, the most gains in integration have come at moments in time when you have a crisis, whether that's the sovereign debt crisis of 2011, whether that's 2008, when there's something staring them in the face, an existential threat, somehow they find a way to agree and move things forward. Hopefully we don't need a crisis of that sort this time.
Immigration. It's not just in the United States on our southern border. It's obviously a huge issue for Europe. What was kind of the latest
And
thinking?
it's not going away, right? When we just look at demographics in places like Africa, when we look at social unrest around the world, we're going to continue to see immigration over the coming decades. And on one hand, we should welcome it, right? Immigration in the United States is the main factor holding up our labor force, which holds up our GDP. But we need to find ways to do it responsibly where we reduce the social anxiety around it, and politicians are unable or unwilling, both sides of the Atlantic, to get that done for the moment.
I look, Rebecca Patterson, at the geopolitics, and I think you're going to tell me on a 3 or 4 year perspective, just ignore it. Good luck. I mean, it's tough right now to ignore this with the debate coming up this Thursday as well.
Yeah, well, debate in France tonight, debate, that's our
There's
warm-up.
I didn't even know that.
Yeah.
Lisa, you didn't inform me. Mon Dieu.
Sorry.
Le debate, aujourd'hui, ce soir. Oh.
But yes, Thursday is going to be one of those where I think a lot of people will be looking with their hands over their eyes and maybe a shot of something next to them at their table. It's very hard to put probabilities on geopolitical risk becoming realities that have true economic impacts. So I think most investors will watch it carefully, but not do much, if anything. And then, of course, we know if the risk reality becomes big enough, usually governments and or central banks ride to the rescue. All right, we saw that after 9/11. We've seen that in multiple areas, right? The regional bank crisis, Fed rode to the rescue. 2008-9, pandemic, government Fed rode to the rescue. And so, yes, you can get pullbacks, but do you want to play that knowing that it might not last long?
So given that background, let's just stay here in the U.S. with the U.S. Fed here. What do you think the Fed should do or will do, or because it's kind of, people are not really sure.
Yeah, I think the risk right now, as the Fed sees it, would be asymmetric. Growth may be moderating somewhat. We see that in jobless claims inching up, albeit from low levels, payroll growth slowing a little bit, but still a strong labor market. If you've got strong equity markets, so strong financial gains, strong home prices, still a resilient labor market, and retail sales slowing, but still okay, why would the Fed feel the need to rush, right? Because if they cut and the economy reaccelerates, then they have to backtrack potentially, which would kill credibility. So I think they're very happy to be patient here. I don't think there's any urgency in their eyes to start that easing cycle. The trick will be, you've got July, that's off the table. They would have signaled it. September, November, December. If they don't go in September, but they see more signs in November, of course they're independent, they're not political, but they also don't want to be perceived as political.
Right. Part of the Rebecca Patterson charm is a real understanding of history. It was beaten India in Florida, and of course at Johns Hopkins as well. I'm having trouble with the gloom cruise parallels to 1999, which Paul and I remember in Technicolor. I had the clearest memory of looking at the 700 red herrings behind my desk, going, there's not a dime of profit in any of them.
Right.
Is there a parallel, an analog to March of 2001?
Not a strong one, certainly not one that would prompt me to be getting out of equities here. I do think as we get closer to the election, as we're higher for longer on Fed funds for longer, that equity gains could be more limited from here. We've had a huge run up already, notwithstanding the couple days pullback we got. So I'm not looking to reduce equities or get out of equities in the short term, just be cognizant it might slow down. But to your point, you know, Nvidia, is it signaling it's another Cisco? Are we looking at 1999? The only parallel I see is retail investor involvement. So retail investors as a share of trading today is back up to highs we last saw around 1999. Does that mean we're about to crash? No, but it's another data point to keep an eye on. But the earnings behind these big tech companies is completely different this time around. So to me, that's a very important differentiator, makes me less nervous.
Too short a discussion. Rebecca Patterson, come back. Let's do an entire half hour sometime here. Yeah. She has to travel it. I mean, you know, LaGuardia, you know, all that, coming back from Brussels, JFK.
Of course.
Rebecca Patterson with us, of course, with Bridgewater and Bessemer Trust for years. Futures up 9 with our news in New York City. John Tucker.
All right, thanks, Tom. And as we gear up for Thursday's debate, voters headed to the polls today for primaries in New York, South Carolina, Colorado, and Utah. Now, Bloomberg's Amy Morris has this preview.
In New York, Representative Jamal Bowman, a member of a bloc of hard-left Democrats known as the Squad, is this cycle's first Democrat in danger of being rejected by his party's voters after his criticism of Israel sparked an effort to remove him from Congress. Bowman faces a challenge from Westchester County Executive George Latimer. In South Carolina, Mark Burns, a Donald Trump-endorsed pastor, faces Sherry Biggs, an Air National Guard lieutenant colonel, in a Trump-friendly district. In Utah, 4 Republicans, including one backed by the cryptocurrency industry, are on the ballot for the Senate seat of Mitt Romney, who has decided to not seek a second term. In Colorado, Representative Lauren Boebert is seeking re-election in a new district and is expected to win her primary over splintered opposition. In Washington, Amy Morris, Bloomberg Radio.
And this congressional primary day, also another day of debate prep for President Biden. He's been at Camp David since the weekend, huddling with aides to prepare for the showdown at Atlanta with former President Trump and beat back concerns about his age and fitness. Tina Fordham is a geopolitical strategist at Fordham Global.
Arguably, the bar is higher for Joe Biden because there has been this relentless kind of narrative about him being a doddering, old fool. And Trump comes out guns blazing with what is really also a meandering way of expressing himself.
That's Tina Fordham, a geopolitical strategist at Fordham Global. WikiLeaks co-founder Julian Assange will plead guilty to leaking U.S. national security secrets and return to his home country of Australia. Comes under a plea deal with the Justice Department that ends an almost 15-year battle over his prosecution. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paul, Tom, and Lisa.
John Tucker, thanks so much. Paul, I am fascinated by sort of a quiet from the bears, and now there's been a new reaffirmation. All of it centered around Nvidia.
Right.
I haven't looked at the chart, but as many articles are saying, where's support on Nvidia?
Yeah, exactly.
On a technical basis, good luck. I'll do it on the Bloomberg, folks. It's a number of metrics I use, but
yep. So we're still, stock's up, 138% year to date, up 180%.
One of your kids has 1,000 shares of
course,
Nvidia,
yeah,
right?
Yeah, they're not talking to me. They don't need me anymore.
See ya. Yeah. Futures up 10. Red and green on the screen. NASDAQ a little elevated this morning. From New York City, Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no turnkey custody solutions. Head to ibkr.com/RIA. All right, to the markets we go. NASDAQ futures leading the charge up about 0.4%. S&P futures up 0.1%. We have Dow futures down about 0.1% or 45 points. The 2-year yield 4.73%. That's little change. The yield on the 10-year 4.22%, and that is little change. We had some more Fed speak. Federal Reserve Governor Michelle Bowman. Well, she said she sees a number of upside risks to the inflation outlook and reiterated that need to keep borrowing costs higher for some time. Now, what's moving the markets? We'll start with Airbus. ADRs down about 6%. It lowered its guidance. That was due to persistent supply chain issues. Meanwhile, Boeing shares, they're down nearly 1%. Sources saying the company is offered to acquire Spirit AeroSystems, a mostly cash offer. That deal values the supplier at about $35 per share. And finally, checking in with shares of Paramount Global, down nearly 1%. A company announced it's raising the price of its streaming service. That is your Bloomberg Business
That'll
Flash.
solve
Tom
the
and
problem.
Paul.
We go to Paramount watcher Paul Sweeney. Are you kidding me?
There's no other way to grow revenue here. I mean, how many more subscribers can they add? I don't know. I read that great piece in the New York Times yesterday from over the weekend. Most
Barry
people
Diller, John Malone, and Brian Roberts.
Yeah, from Mr. Stewart wrote that. You need at least 200 million subscribers to even remotely think about getting profitable.
Yeah, I saw that.
So it's interesting. So
very good.
Yep.
We're all living this. I mean, Kevin Gordon doesn't have a TV, so he's
no, he hasn't. Never subscribed.
I'm looking at the calendar right now, but I just noticed this on surveillance vacation days.
Yeah.
Mateo has the entire month of July off.
Oh, good. Well, that's how you do it. That's how you do it.
Quiet.
So you doing? Let's get out the calendar right now. The 30th of June, end of the quarter, is a Sunday. So I would say Wednesday, tomorrow, is where the sweat breaks out, where you have a record number of mid-year outlook reports. Remember when, before the internet, Paul, they would stack up on your desk and they would sit there till Columbus Day and then see ya.
Goodbye.
Why don't you bring in the writer of the mid-year outlook report? My deepest sympathies.
Exactly. Kevin Gordon, senior investment strategist at Charles Schwab, joins us here in our Bloomberg Interactive Broker Studio. So, Kevin, we're up. I mean, just looking at the SPX, we're up, 15% on an equal weighted basis, maybe 5%. So this isn't a market where everybody's participating. It's really concentrated. What are you telling your clients these days about the back half of the year in terms of opportunities in the equity market?
Well, you alluded to the mid-year outlook that I'll say I was a co-writer, not the writer. Lizanne was my co-writer, but
stop. She's off at a Led Zeppelin, tour concert thing. You're right.
Continue. But these bifurcations that we've seen, both in the economy and the market, it's fascinating. You mentioned, Paul, the spread between equal weight and cap weight. That started to really break a few months ago, where participation started to lag for the so-called average stock, and you had this massive outperformance at the mega cap stock level. But that in and of itself, I think, often gets villainized, where investors who tend to be a little bit more bearish will say, oh, look at the share of overall market cap that these mega caps are, or look at the outperformance. That in and of itself is not the bad thing. When you start to get worrisome signs is when the rest of the market doesn't participate as much. So if you look over the past year, only 20% of the S&P 500's members are outperforming the index. If you look at the average members' maximum drawdown in the S&P year to date, it's down 15%. The index has had no more than a 5.5% drawdown this year. So these are some of the divergences where it's not fatal to the bull market, imminently, but we want to be on guard for the second half of the year. If those persist, then I think you have more of a risk.
So what are you telling your clients in terms of trying to find opportunities for the second half at Charles Schwab? Do you just latch on to those big tech names that have worked so well for so long, or do you try to find value in financials, in energy, in other sectors?
I mean, I think staying invested in those areas that have done well makes sense because, what has changed, I think, and Lizanne and I think, and we wrote about this in actually a report that we put out yesterday, as well as alluding to it in the mid-year outlook, was I think that to some extent the concept of defense has changed a little bit in where investors view defense in the market and how they can play defense. Where, even if you look at the most recent sort of soft patch of economic data, what has been the knee-jerk reaction on the part of investors? It's been to jump into the big tech-like parts of the market. That's where the premium is. And I think for where we are in the monetary policy cycle, the fact that we're still having a Fed on hold and small caps haven't done well, even though you're a year and a half into a bull market, what has been viewed as defense is companies that earn a lot on their cash, don't owe a lot on debt, and that tends to be the tech sector.
But I'm looking at Apple, which has been beleaguered until recently, and I got a forward multiple on the Bloomberg of 32. That's not defense. So the only way you can rationalize Apple as a defensive stock is to slam your terminal value or your investment horizon out years. Where is Kevin Gordon's investment horizon now?
I think that's
2030.
I think that's what people are doing, though, because even in this backdrop of sentiment being really frothy, I mean, I view valuation, and we view valuation as more of a sentiment indicator than anything else. So you talk about a multiple upwards of 30, even for the tech sector. Trailing price to sales ratio is at an all-time high. Forward price to sales ratio is at its highest since the early 2000s. Forward PE ratio is at the highest since early 02. All of that just tells me that people are really optimistic on stocks, and in particular that sector, and they're willing to pay, in some cases, somewhat nosebleed valuations for it.
But are we paying for 2027 right now? To me, a huge body of the market is.
I mean, but it also depends on which metric you're looking at. Are you paying for the revenue? Are you paying for the earnings? Are you looking purely at now what I think has become more important of a metric, the spread between what you earn in the equity market versus what you earn in the bond market? That is compressed to levels that we haven't seen in a couple of decades. So I think it just depends on which metric you want to use. And it kind of goes back to, for a long time post-financial crisis, when you were looking relatively expensive across all these traditional valuation metrics, the one that the bulls were able to cling to was the spread between the earnings yield and the bond yield. Now that has not really worked as much in favor.
So what do you tell the Charles Schwab customer that says, I just want to buy a 2-year treasury and get close to 5%, and I don't need to think anymore.
I'll channel, my colleague Kathy Jones in saying that we've been favoring the idea of extending duration and not necessarily wanting to stay, at least in cash. So the 2-year, not necessarily synonymous with cash, but the idea that at some point, we're not gonna be in this environment with the Fed staying on hold this long. Do we think we're going into some aggressive cutting cycle in the near term? No. So yeah, for the most part, I think that the cash play has made sense. But I think that I very much agree with Kathy that, and I defer to her viewpoint on this, where it makes sense to extend duration there.
I want you to talk about the actuarial reality, Good Morning Boston College, and their great retirement structure, where we really don't think about retirement in America until 42 years old. Is a person of Ute, including just graduating from, I think believes in NYU Stern, Kevin Gordon, how do you convince younger people that it's okay to put money aside in a 401k forever?
It's one of Schwab's biggest missions, but my own personal mission to do so and to let people know that
you bring an authenticity to it, because you're one of the brats that's down in Soho spending $300 on dinner.
Oh gosh, that's not me, but
that's
no.
That's Lisa. Who's confused.
I'm a Hamburger America fan. It's in Soho, but it's not $300.
But Hamburger America, look that up.
It's a great restaurant. I think that. I'll quote our founder, Chuck Schwab, with investing being an act of optimism itself, it does take a degree of optimism to do that. I think particularly for young people, when I talk to either my friends, my peers in the industry, anybody who skews younger, the trouble is thinking, and there's this myth that you have to have a lot of money to start investing. I think just the discipline of it and putting a little bit away.
That's the difference.
That's the key.
We had to buy odd shares in that. And with Schwab, what do you call them? Partial shares?
The slices.
So slices. Yeah. It's a no-brainer. Yeah. Do the slices, folks. Okay, I got 30 seconds. George Motz's fried onion burger, $7.25.
That's what we're talking
Hamburger. That says road trip this weekend. Is this Kevin? Is this one of these places with the lines out the door 3 blocks?
Sometimes, if you know when to go.
When?
Fortunately,
you got 10 seconds. When?
Right when they open. You got
right when they open.
Yep.
11 o'clock.
But sit at the counter. Paul, it's a diner theme. It's amazing.
This says, oh come on, Lisa, road trip.
Let's go.
I think we do a remote
from America.
What do you think, Ken? Hamburger America remote? I mean, come on.
I got the Amex. We're ready to go.
The classic smash burger. Mustard, onion, pickle, cheese. Kevin, you can come back tomorrow.
Let's go. I'll bring some.
Kevin Gordon, restaurant selection this weekend. Good morning, Hamburger America. It's beneath 59th Street?
Yes.
Oh, boy.
I don't know if I can go. You'll bring it to me. Thank you. Kevin, thanks so much. Futures up 8. Stay with us. Mike Wilson later, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We're seeing just a slight lift to the markets in some areas as shares of Nvidia bounce back before the bell. Right now, shares of Nvidia, they're up more than 2%. So we have NASDAQ futures up 0.4%, 81 points. S&P futures up 0.1%, up 9 points. Dow futures down slightly, down about 0.1%, down 46 points. We have the 2-year yield at 4.73%. That's little change. The yield on the 10-year, 4.22%, and that is little changed. Quick check of commodities. commodities. We have spot gold lower, $2,330 an ounce. Brent crude, $85 a barrel. WTI crude, $81 a barrel. We have a big move from Ozempic maker Novo Nordisk. ADR's up nearly 2%. The company says it'll invest more than $4 billion in another U.S. factory. Now, on top of that, China has approved the company's drug Wegovy for weight loss management. Meanwhile, another high-profile drug failure for Merck. The company says it's going to discontinue development of the drug for treatment of head and neck cancer. Their shares are up about 0.2%. And attention shoppers, Amazon announced the dates for this year's Prime event. The online sale for Amazon Prime members is going to be held July 16th and 17th. Shares up 0.3%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. This is what surveillance is about. Paul and I really delegate all of the booking to a wonderful team led by Giuseppe's father. And we have we make comments and all that. We're like Kevin Gordon. He was, Schwab. But I'm kidding. But we really delegate. So yesterday, we had a chemical engineer in from Penn State where chemical engineering was invented. And then Mr. Walker, a chemistry major in 1880 at Penn State, went up to a small school in the Charles River and really invented chemical engineering at the Massachusetts Institute of Technology. Should we do back-to-back days
Let's
with
do
chemies?
it.
Let's do it. Troy Gajewski, come on down. Troy Gajewski, Chief Market Strategist, FF Investments, chem engineer at MIT. Let's go to the thermodynamics you struggled through, Troy, in this odd thing called entropy, which is the religion of the physical space. Where do we fit in now in terms of a plan, a theory, with all this big tech, all this AI? Do we have a plan forward, or are we making it up as we go?
Tom, as usual, you're too kind. I hope you are as big of a fan of the Celtics as you are the Red Sox, because that was a big.
That was very good. Yeah,
that was very good, right? We'll take it.
Where were the Bruins?
Yeah, well, hey, you can't win them all, right? But so it's really, I've never thought about entropy relative to mega cap tech right now, but I think it's such a great analogy because I think the entropy that's been difficult for people to grasp is the fact that, you're in a winner-take-all economy. There's been this never-ending desire for long-only investors to have catch-up trades and cyclicals or value. And the reality is the mega cap tech companies, ex-Tesla, maybe throw Eli Lilly in there, they just have such wonderful free cash flow margins where they're having these massive CapEx spends, Tom, equal to 70 basis points in nominal GDP. But at the same time, their margins are expanding. It's like nothing we've ever seen. So that entropy, that leakage of energy into a lack of a productive use, I think there's been a lot of that time spent by the long-only community trying to figure out, hey, when cyclical's going to catch up. It's just not going to happen.
Paul, this was codified. Gajewski's dead on. We're not going to go into the math. It's a Tuesday. It's 90 degrees today. But this was codified by Michael Mauboussin 15 years ago at Credit Suisse, where he said you got to look at this on a log chart, and what you end up with is few winners. And that's just what Gajewski said there.
So, Troy, for the folks out there, you may be looking to put some capital to work here. Do you just kind of close your eyes and jump in on some of those big cap tech names that have, in fact, been such good winners? Or do you try to find some value out there somewhere in other sectors?
Yeah, I don't think you want to completely disregard, analysis based on PEs and historical relationships, but you have to understand that the probability of weaker companies, like in the Russell 2000, where 30 to 40% of them don't even make money, in an economy growing 7%, is highly unlikely. So, from an asset allocation standpoint, what we're really seeing institutional investors embrace is, if you're going to get long-only exposure, go with market cap weighted indices, whether it's the NASDAQ or the S&P. Spend your time and energy focused on how to complement that with alternatives like private credit or middle market private equity that can give you maybe not quite as much growth over the long term, but certainly a lot less volatility, because sooner or later we're going to have another recession. Sooner or later we're going to have maybe not 2022, but something that smells like it. And so we've seen much more of that embrace, particularly when bonds have been so disappointing really over the last 5 years. And it's kind of funny when these articles are written about, bonds aren't down anymore. It's like, since when is not being down a victory for investors, right?
Well, how about just the whole notion of maybe just buying bonds for the carry. I mean, you can get on a 2-year treasury close to 5%. You want to take a little bit of credit risk, you can get some more than that. Is that something to think about for most people?
Yeah, no, that's certainly not crazy. I mean, if you think of the biggest winner in this asset allocation challenge the last 2-3 years has been cash, right? And we've seen some of that cash leak out into shorter dated treasuries. We would still favor that over chasing duration at the long end, particularly after this recent rally. Because, when you think of just the bond math, right, and you think about historical yield curve slopes, let's assume the terminal rate for a second is 3%, right? So the Fed takes the front end to 3. Where should the 10-year be? Not 3, more like 4 to 4.25, maybe even 4.5 if we have a reasonably normally sloped yield curve. So when you're reaching for duration, you're really not, obviously you're not picking up any yield. You're still getting a lot of that eaten away by inflation. And you're taking that risk of a repeat of April, of a repeat of September or August to October of last year, where because of the persistence of inflation, and you saw Bowman come out today, the Fed is not hiking, by the way, just for the record, but,
right.
But as you have Fed members talking about hiking rates further, you could get some really nasty bear steepening price action. And is the return really worth it? Like, is it worth the brain damage? So stay in the short end, stay in cash, look for other ways to complement your mega cap tech.
Nasty moves. When was the last time we had half a correction?
Yeah, exactly. I mean, I don't know, it was April, 5%.
April of 2020 something.
Troy, how do you think about, with the lack of a correction, how do you think about valuation in these equity markets here? A lot of folks are suggesting, if you pull out some of those big cap tech names, this market's not overvalued by any stretch.
Yeah, well, I mean, on classic metrics, right, whether you look at forward PE, we hit 21.8 times forward earnings recently in the S&P. We're back to like 21.2, which is, by the way, the exact same place we were at the end of 21 before the Fed started to tighten. When you think of, the Magnificent Seven minus Tesla plus Eli Lilly, you're like 34, 35 times. So that is the biggest fundamental challenge, right? When you're starting at such elevated valuations, you really need the empirical evidence going forward. I know Tom likes empirical evidence to justify those valuations. So the key risk is execution, right? Nvidia's margins start to collapse. Facebook, right. Zuckerberg goes on a spending spree again, and you end up with margin compression. But that just looks less likely now. The valuations are certainly stretched, and clearly a big move in rates could cause that to compress this.
Troy, one final idea, and I look at it almost a keel of a sailboat. I mean, Tucker's got the Hinckley Bermuda, down in New Jersey, but you got the massive lead keel down by Hinckley, north of Boston, and Troy, I look at the keel of what we're talking about, and it's just a wall of money. Blackstone was some announcement today of $1 billion here, $1 billion there. How do you judge, or a judge, I should say, the wall of cash that's out there globally?
Yeah, it's immense, Tom. I mean, again, you think of the 2.6 trillion more that's in money market funds since pre-pandemic, which was already on a huge uptrend before the Fed started to hike meaningfully. That was after they cut in the beginning of 19, late 18. You think of the 1.7 trillion more in CDs. You think of the 4.2 trillion more in commercial bank deposits. So you have this vast cash pool that's been hanging out in cash, is gradually being put to work in middle market private equity, private credit, mega cap tech, leaking back to equities. But when you think of that forward, the opportunity cost to continue to hold cash is becoming borderline unbearable. And that's what feeds these kind of magnificent technical rallies where you get overextension, is just money flowing in late in the game. Over the next 3, 5, 7 years, probably not late in the game, but next 2 to 4 weeks with the the buyout window closing and CTAs at like max long allocations for 20 years, the markets are a little bit more fragile right now than they were, say, 6 to 8 weeks ago.
Troy, remember when we walked in and we thought Thermo would be an easy A?
I was never that delusional, Tom. I won't share with you what I got on my first fluid mechanics test. It was embarrassing.
In engineering, folks, thermodynamics is a rite of passage where you just start praying and then you move forward. Troy Gaske, this is really interesting. Thank you so much for that. We'll feature Troy Gaske today on Single Best Idea out on Apple Podcasts. With our news in New York City, John Tucker.
All right, Tom, we're just 2 days away from the first debate in the rematch between President Biden and former President Trump. Biden is spending the week at Camp David doing intensive preparation with aides, while President Trump preparing in loosely organized sessions. Tina Fordham with Fordham Global Insight says with 4 months still left until the election, not clear how this debate is going to impact the race.
The debates rarely move the needle on polls, but it will generate headlines, and perhaps it will mean a bit more in a race like this, where so many Americans really don't like either candidate.
And our coverage of the CNN presidential debate begins this Thursday night at 8 p.m. Wall Street time. Listen on Bloomberg Radio or watch Bloomberg TV. WikiLeaks founder Julian Assange has agreed to plead guilty in a deal with the Justice Department. That story in this report from Bloomberg's Ed Baxter.
Felony count of espionage will resolve a long-running legal saga that spanned multiple continents, centered on publication of a trove of classified documents dating back to 2010 and 2011. WikiLeaks statement saying this is a result of a global campaign that spanned grassroots organizers, press freedom campaigners, legislators, leaders from across the political spectrum, all the way to the United Nations. He will be in court on the Mariana Islands and then go back to his native Australia, not wanting to head back to the U.S. where he could face a lengthy sentence. Ed Baxter, Bloomberg Radio.
And a U.S. Surgeon General today declaring gun violence a public health crisis driven by the fast-growing number of injuries and deaths involving firearms. The advisory issued by Dr. Vivek Murthy, the nation's top doctor. This comes as the U.S. grappled with another summer weekend marked by mass shootings that left dozens of people dead or wounded. And recall to tell you about, the Food and Drug Administration says more than 3,500 bags of dog treats have been recalled over metal contamination concerns. Richmond, Virginia-based TD-BBS recalling 3,500 bags of its Green Tripe dog treats distributed in stores nationwide. The recall affects two brands sold by the company, Barkworthies and Best Bully.
Oh, no, we don't have those. We don't have.
Your
Thank
dogs,
you, though. It's good.
your dogs just get, what, caviar?
Yeah, no, we just, it's some, full sirloin thing from Leonard's over on 2nd Avenue. Of course, we're in mourning. It's a birthday announcement here at Surveillance. John Tucker's birthday. Lisa, when you get over a certain age, you play taps on your birthday. Happy birthday, John.
Happy birthday, Tucker.
Oh, thank you very much.
It's so emotional. Did any of your children
This is the first they know of it. As if they're listening. No, nobody knows.
It just
nobody
gets
cares.
better every year.
You reach a certain point, you just start going backwards, and you just forget them.
Now, like you and Paul were on the deck there as Paul got off ferry across the Mersey on Friday there.
Exactly.
Did you
What'd you think of that ferry trip?
Love the ferry trip.
Yeah.
The ferry trip was great. You see all the great sights, the Statue of Liberty, and you go.
You're like El Turisto.
Exactly. Yeah. You go by these huge monsters. Cargo ships, pass right by them, and then you get there.
So when you go on the deck, what do you have?
Cocktails.
Yes.
I mean, it's a restaurant, but
exactly.
But I don't know, like a dark and stormy, something with an umbrella in it. Summertime.
Well, happy birthday.
Yeah.
Well, thank you very much.
So it's emotional. We won't play taps for Lisa's birthday.
That's something to celebrate.
Lisa. I mean, it's just a wide gap there between me and Lisa.
John Tucker, thank you so much, doing so much for all of Bloomberg Radio. Out on YouTube, subscribe and search for John Tucker at Bloomberg Podcasts. Android Auto, also Apple CarPlay. John Tucker on Apple CarPlay. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, well, we've got a mix of red and green on the screen. NASDAQ futures up 0.3%, 64 points. S&P futures up 0.1%, 7 points. Dow futures down 0.1%, or 68 points. The two-year yield at 4.72%. That's little change. The yield on the 10-year 4.21%, and that's down 1 basis point. We have the Japanese yen 159.43 against a dollar. We'll head over to Bitcoin right now, up about nearly 3% at 61,147. And a fourth recall for Tesla's Cybertruck in the U.S. taking another hit. This time it's to fix problems with trim pieces that can come loose. Also, the front windshield wipers may not work. It affects more than 11,000 trucks. Tesla shares, they're up about 0.5%. Ford, they're also recalling. They're recalling more than 550,000 pickup trucks in the U.S. That's because there's a transmission. It can unexpectedly downshift to first gear no matter how fast you're going. Ford down about 0.2%. And finally, Uber. They've started to lock out New York City drivers out of its app during those slower periods. Lyft threatening to do the same thing. The company's blamed this rule in New York that requires them to pay drivers for that idle time they rack up in between rides. Some drivers saying their wages have fallen as much as 50%. Uber up more than 1%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Bloomberg Surveillance, we're always brought to you by Interactive Brokers, their bond marketplace. Access their vast selection of over 1 million global fixed income securities with no markups or built-in spreads and low transparent commissions. Learn more at ibkr.com/bonds. We protect the copyright of all of our guests. At Morgan Stanley, get a weekly report from one M. Wilson, he of Michigan and Ann Arbor, where there's a paragraph that should be framed. And Mike Wilson of Morgan Stanley, you take us back to 1965. I don't remember 65 per se, but boy, do I remember the giddiness of the fancy suburb I grew up over the Nifty 50. Are we Nifty 50 right now?
Well, 65 was before the Nifty 50 mania, of course. But I mean, look, the point of this week's note was just reminding people that essentially we have a situation where the breadth is unprecedented, really going
unprecedented
back.
Bad.
Yeah. Well, it doesn't have to be bad always, Paul. I mean,
okay.
So that was the other part of the note was that narrow breadth doesn't always have to end in tears. It does end in tears if it's presaging a recession or some other shock, and we have plenty of candidates for that potentially that we could talk about. But it's more of a 50-50. You really don't know. What it tells you is that the market is structurally fragile. Okay, that's what I think is probably the real takeaway, and I think it's correct, right? Which is that we have this situation where we have a very unbalanced policy mix of extremely strong fiscal policy. The Fed is remaining very tight with interest rates, and they're flooding the system with liquidity to kind of keep it all moving along. So the stock market, as usual, is smart. What has it done? It's gone. It's gravitated to the stocks that can navigate this challenging environment, and it happens to be sort of a nifty 50. And we wrote about this week too. We think this is sort of a combination of late 90s and the Nifty 50 period. Now, both of those went on probably longer than people thought, and then eventually we had a hard landing. I kind of have that view too, is that we're in a late cycle environment. That could last a while, right? So the market is behaving exactly the way it should be. That fragility is there, but it doesn't change unless you get a spark or a catalyst.
So in that type of market, in that type of framework, do we need the Fed to start cutting rates? Otherwise, this market really is at risk?
Well, look, I'm not of the view that the yield curve is irrelevant. So the yield curve apologists are out there saying, well, it doesn't matter anymore because of this policy mix. I don't think that's right. I think what's happened is the yield curve's been inverted now for almost 2 years. Okay, and it's just taking longer to have its desired effect on overall growth in the economy. Why? Because the government's spending so much money fiscally, and there are big companies that are still doing well, which is kind of keeping things moving along. And by the way, wealthy investors citizens are benefiting from the higher stock prices. So it's just taking longer. But we're now into that window where you got to believe, historically speaking, yield curve been inverted for 18 to 24 months. You're kind of reaching the limits of that. And that's why we're kind of on alert for potentially growth now, surprising to the downside. It hasn't happened in a way where the market cares yet at the index level, but that to me is the biggest risk to this apple cart getting turned over.
I look at your work, and everybody's very aware you had a caution going into this continued bull market. And with great respect to your caution, I would suggest a huge body of clients agreed with that caution. As you have shifted to a more optimistic upmarket based on growth, not inflation, do you see Morgan Stanley clients shifting to a more optimistic tone?
Well, that's been happening over the course of the last 9 months. Let's not forget, in last October, most indices were making new bear market lows. A lot of stocks were as well. And then we had this incredible pivot, not only by the Fed, but by Treasury. And that worked swimmingly to inflate asset prices. So I think, investors were forced to participate, whether you were, positively inclined or not. And now, though, we're in a situation where that goodness, that soft landing, has been sort of priced, which makes it harder. It doesn't mean it has to, crash tomorrow or there's going to be some terrible outcome. But this idea that you can just sort of gravitate to nifty 50 type world, that's played out now correctly. And so the question now you have to ask yourself is, can multiples continue to expand further when the Fed starts cutting? Our experience is that once the Fed actually starts cutting, that's probably when multiples come down, ironically. So the longer the Fed waits, the longer that this environment will probably persist.
It's almost as if the expectation of rate cuts are as valuable, maybe even more valuable, as an actual rate cut.
More valuable.
As long as, more valuable. It's kind of buy on a rumor, sell on the news type
100%.
of thing. So let's just talk about valuation here. How do you think about valuation in this market? Are you one of those folks that pulls out the Magnificent Seven and says, we're okay? Or how do you think about it?
We're expensive no matter how you cut it.
Okay.
Right? When you look at median multiple, the average multiple, taking out the 7 for the 493. Now, of course, certain pockets of the market are more expensive, and correctly, right? High quality growth is expensive because that's where the earnings have been. So I don't it's not that it doesn't make sense. It's happened for a reason. First of all, my belief on valuation is very clear. It's useless in the short term. It's the most important thing in the long term. So in other words, over 12 months, valuation is irrelevant. Over 7 years, 7 to 10 years, it's perfect. It has a perfect.
That's right where I wanted to go, and because of time, I got to get this in. It's too important. Have you moved your terminal value out to rationalize higher multiples, or are you putting more weight on individual year performance versus some fancy calculation of what's out there?
It's the latter. You have to look. We have to navigate the markets in the 6 to 12.
Literally on a quarterly
basis. That's how people invest,
Yeah.
and not day to day, but it's that 3 to 12 months is really the sweet spot, Tom. Absolutely.
So where are you 12 months out?
We're basically flat on the S&P or slightly down because we think as earnings come through, the multiple will normalize to 19 times. By the way, 19 times is still in the top quartile.
Yeah.
Right. So we're not. And that was one thing we got wrong last year. Was we thought the multiple would normalize to 17 times. It didn't get that low.
30 seconds. When you read Ellen Zentner or you're in a meeting with Ellen Zentner, what are you listening for?
Well, Ellen has been, correct in this late cycle environment, and so what I'm listening to is tone change on, what she's worried about now. She's focused on labor. She put a note out Friday talking about the restaurant performance. Basically restaurants slowing, and that's one of her favorite metrics that kind of suggests that, hey, consumers are softening a bit. Not a recession, but those are that's another reason why we're worried more about growth disappointing than inflation surprising on the upside.
Right. Mike Wilson, thank you so much. He is with Morgan Stanley. Paul, there's a lot of meat there, and to me, it's just basically getting away from the Fed parlor game back to something so odd as actually what does company performance look like?
Yeah, earnings.
In FedEx today.
FedEx after the close is always a great barometer of just kind of underlying economic activity, if you will.
Yeah.
The boxes still keep piling up at my door, Tom. I don't know.
My head's spinning over the different parts of the greater American economy. 10-year real yield, 2.00%. That's worth noting as well. I'd also note the slide up in Brent crude, $85 a barrel. West Texas Intermediate, $80.93 a barrel. A little bit of further curve inversion today. Red and green on the screen. Futures up 8. Dow can't get out of its way after 2 big days. NASDAQ 100, it's like a launch. I guess the whole Nvidia scare's over.
Yep. Can we call out Bitcoin for Matt Miller?
We should. Did you see under 60,000?
I saw that last night, under 60,000.
Mike Wilson aged when he saw
exactly.
Bitcoin.
Got it up 2.9% this morning.
That would be a whole other section.
Yeah,
Mike.
exactly.
We won't go there. Hey, what can I say? We're doing songs from 1965 today, just for Mike Wilson and Morgan Stanley. Ferry Across the Mersey. Jerry, produced by George Martin of the Beatles. Very cool.
Hearts torn in air. So ferry, cross the Mersey, 'cause this land's the place I love, and here I'll stay.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr on sabbatical, John Tucker with us, and of course Lisa Mateo. The final hour for the Paul Sweeney show today. When do you exit? Like this?
I exit around 9 o'clock. I hop on the subway, go down to Lower Manhattan World Financial Center for the Bloomberg Invest Conference.
With like real conversations.
Sonali Basak is killing it. She's got some great Wall Street heavy hitters down there, so we're going to be broadcasting down there, Alex Jill and me, from 10 to 12 today.
Lots to talk about. She's really wired into Manhattan in the summer summer season. Think a little tension in the Hamptons right now.
Sure.
About,
that's right.
Rationalizations and the rest. We're looking forward to that. Sonali Basic's leadership there, and Paul Sweeney and Alex Steele down there with good and important conversations. Red and green on the screen. We've got really interesting discussion here. I'll talk to you about it in a moment. Bloomberg Surveillance this morning, brought to you by Cohn Resnick Advisory, Assurance Tax. They're industry advisors. They can customize solutions to help your business create value and increase resilience. Visit cohnresnick.com/advisory. With our Bloomberg Business Flash, Lisa Mateo.
You got it. We got red and green on the screen. This is after the Dow rose Monday trading, but big tech shares kind of dragged the NASDAQ lower. Speaking of tech, Nvidia shares starting to gain some ground once again, up more than 2% after it extended a three-day rout yesterday. Right now, we have NASDAQ futures. They're up about 0.3%, 70 points. We have S&P futures up 0.1% or 9 points. Dow futures, well, they're now down 0.1% or 42 points. Today, Wall Street, well, we're awaiting some fresh data on consumer confidence. Also, a report on home prices. To the bond market we go. The two-year yield, 4.72%. Little change. The yield on the 10-year, 4.21%, and that's down 1 basis point. Shares of Microsoft down about 0.1%. News that it risks a hefty EU fine. Regulators, they're accusing the company of abusing its power by building the Teams video conferencing app to its other business software. Then you have Apple shares down up nearly 1%. Sources telling Bloomberg the company turned down an AI partnership with Meta months ago over concerns of privacy practices. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, let's get right to it, folks. Nancy Lazard joins, iconic on Wall Street. She's chief global economist, Piper Sandler, but much, much more with that, with a wonderful earned perspective in market economics. Paul, back to C.J. Lawrence.
Another one.
She was like 15.
It's
like a high school
everybody that
internship
came out of that
when she was
shop,
there.
Tom. Wow.
She's done brilliant research. We carry it forward. Thank you, Kevin Gordon over at Schwab, for leading this forward. You go to Hamburger America.
Yeah.
And you pony up for the George Motz's fried onion burgers, $7.25. The fries are $4.25.
Okay.
And you got to have a Miller High Life champagne, a bottle of beers.
Yeah, champagne of
$6.
beers.
You're at over $17. Nancy Lazar's focused on McDonald's $5 burger special. Nancy, why is the McDonald's lower prices important to you?
Well, over the past 4 years, you've had a surge in many, many prices on the consumer side and on the industrial side. And quite frankly, even though inflation has slowed, only economists care about the year-to-year change in inflation. Price levels are sky high, with fast food prices up 50% from where they were in 2019. And it's just killing that middle, lower income consumer. And these restaurants and other companies in general that focus on the consumer are really seeing a decline in their unit sales, and they have to respond. And they're responding by cutting prices. So we think we're at the forefront of what could be a very, very unusual, we think we're going to have a recession where you have both a decline in units, which is classic recession talk, but also a decline in price, given the egregious surge we've seen in prices, again, from hamburgers to furniture to electrical machinery.
So, Nancy, talk to us about those prices in connection with just wages over this last 4 or 5 years. Have wages kept pace with this?
Well, incrementally they have, but if you look at consumer real income expectations, which the University of Michigan publishes in their survey, real income expectations have plunged to record lows. Because what you're seeing right now is that the employment backdrop is clearly weakening. Wage inflation has slowed, while price levels have remained very, very high. So actually real incomes, after increasing, are now stagnating, and the consumers are really, really worried going forward, which is what the U of Mich survey suggests, that they're actually going to decline. And that is a real risk if the employment backdrop continues to deteriorate, which we think it will.
So as we step back here, I mean, can the Fed help here if they start cutting rates? Is that helpful, and to what extent?
We think we're at a tipping point where it's almost too late for the Fed, given the increase we've seen in the unemployment rate, which if you use a 3-month moving average, it's up 0.4 percentage points. Once you start to increase this much, classically, you go over the edge and you start to see a real sharp increase in the unemployment rate. And the reason that is we're late cycle. The Fed has been tightening aggressively, or had tightened very, very aggressively. Corporate revenues, ex the Mag 6, are stalling out. companies are responding to that to try to protect their profit margins by starting to cut costs, including cutting jobs. So we think it's possible if the Fed were to come in very quickly and cut rates very aggressively right now, and or we were to get some significant fiscal stimulus right now, we could prevent this. But we would argue that we're at this tipping point, about ready to go over into a recession, and so the Fed will eventually ease, given our outlook, but it's probably too late to prevent the unemployment rate from going up.
And Nancy, Piper Sandler has an exceptional heritage, folks. This is of Minneapolis, of Pillsbury and Minnesota manufacturing and mining, a whole Minnesota feel, over to a banking franchise in New York City from Sandler O'Neill that was just extraordinary. Nancy Lazar, not to make you a bank securities analyst, but how do you link in Sandler Bank research into the fragilities of America?
Well, we have a great, again, as you just said, banking group, and they have their knitting, and I have mine. If I have questions about what's going on, say with the regional banking system, I do have a cohort of people I can talk to, but there is a little bit of a wall there. But we are worried.
Sure, I get there's a wall there, but to be delicate about it, should Jerome Powell be concerned about commercial real estate?
Yeah. Going into a recession, it's not unusual. In fact, it's normal to have excesses. Commercial real estate is this cycle's clear excess. And so Washington is working with this. They're working with the Wall Street, quite frankly, money management community also, in trying to cushion the blow to the regional banking system from what could be a multi-year problem with commercial real estate. And quite frankly, it just highlights the bifurcation in the economy. You have the large banks that obviously have not been impacted by this, but it is the regional banks. And longer term, I'm sure the regulators are well aware of the issues, and they are working to try to mitigate the potential risk to the regional banks.
Nancy, how do you think about, in terms of your recession outlook, how do you think about the labor market here? It still seems pretty darn solid.
Well, with an unemployment rate of 4% now, that is still historically low, but it has increased from 3.4% to 4%.
Yep.
Why is it increased? It's increased because margins are under pressure. The payroll employment data looks strong, but it really is the anomaly. Household employment has been unchanged for a year. Temp employment is down sharply. The work week is down. As I said, the unemployment rate is up. Consumers see the weakness in the labor market. Unemployment claims are now increasing. Payrolls are likely to be revised down. There's data out from the government that suggests payrolls last year could be revised down to the tune of 700,000. And so actually the labor market isn't strong. It's clearly weakening.
Nancy, thank you so much. Nancy Lazar with us, Chief Global Economist, Piper Sandler, this morning, and she alludes to Anna Wong's research there from Bloomberg Economics about how are we calculating. Do you see, Paul, the YouTube live chat is so informative. One guy's out here talking about porterhouse steaks have just made another leg up.
Wow.
I don't even look at them.
No.
I mean, they just go by. But,
yeah, I don't know. I mean, that's inflation. The level, as Nancy was saying, for everybody, for a lot of us, it's higher. Now, maybe the rate of increase off of that higher level is declining or slowing, but it's still higher level, and that's what people have to deal with.
I looked at a jar of relish the other day and said, really? $4 for a jar of relish? Please. With our news in New York City, we relish the thought. John Tucker.
All right, Tom, Paul, Lisa, we're 2 days away from the first debate in the rematch between President Biden and former President Trump. Biden's spending the week at Camp David doing intensive preparation with aides for the debate, while Trump is preparing in loosely organized sessions. Let's get more in this report from Bloomberg's Bill Ferries.
At some level, it's make or break for both men. There's a lot of pitfalls they're both facing, but certainly for President Biden, who seems to still be behind in a lot of the battleground state polls, he cannot really afford a slip up or a moment where he either appears confused or forgets something. So he is. I think the pressure is in some ways more on him.
It's Bloomberg's Bill Ferries, and our coverage of the CNN presidential debate begins this Thursday night, 8 p.m. Wall Street time, with a special edition of Balance of Power from Washington and Atlanta. You can listen on Bloomberg Radio or, of course, watch Bloomberg TV. Hours after the news broke of WikiLeaks founder Julian Assange's deal with the Department of Justice that effectively ends his incarceration and allows him to return to his native Australia, Julian's brother Gabriel Shipton says his family is ecstatic and eagerly awaiting his return.
I've been speaking to him this week and just going through all the details with him, and very anxious, very excited, and he's looking forward to spending time with his family and being free.
As part of the deal, Assange is going to appear in court in Saipan to plead guilty to a single charge of the Espionage Act. If it's accepted by the judge, he'll avoid prison time. Israel's Supreme Court has ruled today the military must begin drafting ultra-Orthodox men for military service. Now, this is a decision that could lead to the collapse of Prime Minister Benjamin Netanyahu's governing coalition as Israel wages war in Gaza. And torrential rain continues to pound the Midwest as officials in Mankato, Minnesota warn the Rapidan Dam could fail due to the record water level, the latest major structure damaged by these storms. A lot of other states in the Midwest underwater, or at least one person dying in South Dakota, according to officials there. A critical infrastructure throughout the region taking a direct hit. And a Chinese probe returning to Earth with rock and soil samples from the little explored far side of the moon, an important milestone in China's lunar exploration. Its cargo may offer a veritable cornucopia of lunar geological marvels. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg.
John Tucker, thanks so much. Even Luke Kawa, Toronto Maple Leafs icon, was rooting for Edmonton last night.
Really?
The NHL had a home run before the game. This is from Ottawa, Alanis Morissette.
Oh, Canada, our home and native land, true patriot love.
Absolutely brilliant. I don't know who thought that up, but Alanis Morissette, just iconic with Quebec and with all of her success with Jagged Little Pill years ago. The Canadians didn't win.
Nope.
Florida won.
Yep.
I don't know what it means. Maybe it's free. Maybe Disney World's free today.
Yeah, maybe. I mean, the third time in the finals they win it.
But at least there's a Canadian team finally. And Rich, when was the last time a Canadian team won the Stanley Cup? Like 30 years ago. Yeah, like way back.
Yeah.
93. Thank
Canadians.
you. Yeah, 93. So, there it is. Hockey's over in
Finally.
90-degree weather.
Exactly.
Way too long. From New York, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. NASDAQ futures leading the gain this morning, up about 0.4%, 79 points. S&P futures up 0.1%, or 10 points. Dow futures down 0.1%, or 38 points. The 2-year yield at 4.72%, that's little changed, and the yield on the 10-year 4.21%, that's down 1 basis point. We had some more Fed speak. Federal Reserve Governor Michelle Bowman says she sees a number of upside risks to the inflation outlook, and she reiterated that need to keep borrowing costs higher for some time. What's moving the markets? We'll start with Airbus. Their shares in France down about 12%. It lowered its guidance due to persistent supply chain issues. Then meanwhile, Boeing shares, they're down more than 1%. Sources saying the company, it's offered to acquire Spirit AeroSystems with a mostly cash offer. That deal, it values the supplier at about $35 per share. And Nike betting on $1,000 Air Jordan high tops. It's part of a plan to win over China. The company opened this huge retail space paying tribute to Michael Jordan in Beijing's trendiest neighborhood. $1,000. That is your Bloomberg Business Flash. Tom and Paul.
So Brad Stone, Angelina Rasco, and Bloomberg Business Week this week on Louis Vuitton and LVMH. And they lead the story with Arnaud upset. He goes into a store, I think in Dubai, and he's all upset because one of the kids is wearing Nikes.
Yeah.
And he's 75 years old. He's so sophisticated. He goes, they're not the ones you just mentioned, Lisa. What do you call them?
The
Air
fancy,
Jordan
the
1s?
Air Jordan, $1,000.
But Air Jordan 1s are like a certain Air Jordan, which LVMH works with. And he's having a cow because it's just a regular set of Nikes.
Yes, attention to detail.
Our article's getting a lot. Angelina Rasco went back and forth with me from Paris today.
Oh, yeah?
She only writes me in French.
Okay.
You know, it's
very good.
You know, that's what it's the way she rolls. Okay, I'm going to get a little technical here, folks. Nvidia, I've never seen before. We all know how it's gone up. Sweeney's got some in his 501k. And on any technical study I do, think Chris Verone, it is so far extended. Paul, at the top, it has to go down 40% just to get to support.
Oof.
Even from here with a pullback, it has to go down some 30% just to get to support. And I look at a weekly study, and it's nowhere near defining south at this time. We bring in Nvidia South correspondent for Bloomberg Surveillance, Kriti Gupta, with this right now. What does the street say, Kriti? Do they say it's done for Nvidia?
They say this was long overdue, and I think one of the big things that people are scratching their heads about is not necessarily Nvidia's sell-off, because if you look at the charts, to your point, Tom, every single one has suggested this has been overextended for a while. The story has long been going from the fundamental-driven narrative to a really momentum, short-squeeze liquidity narrative, which basically means for the average Joe out there who isn't as nerding out like Tom Keene is, the idea of him is that everyone has to get into it because they don't know what it's like to not be into it. Right. And I think that's as simple as it gets. Yeah. When it comes, though, to the part that's kind of confusing people is why that sell-off that you're seeing, a 13% drop in the stock, is not showing up in the broader market.
Paul, did we ever talk about narratives? I have no recollection of worrying about narratives.
Exactly. Kriti, I mean, it's not just Nvidia. I guess it's a lot of just this AI trade in general that's really been one of the drivers of this move higher in the markets in 2023 and so far in 2024. Are we seeing some of the pullback in some of those other names that are kind of associated with this AI story?
You absolutely are, and I think there's a really good kind of case study to talk about here, and that is Apple. You have Apple is kind of known as, of course, the mega weight, which used to be, by the way, one of the most valuable companies in the world. It was then overtaken by Nvidia as getting that crown. In terms of the way it reacted with the rest of the market is important because Apple is known and criticized by the street as being late to the AI game, that they didn't invest in the way that Microsoft did with OpenAI or the way that AWS or Alphabet even is with their relative AI platforms as well. Apple now having some of those even rumors or reportings that they could be partnering on the AI space or even involving more of it into their iPhone, and you're still not seeing that read through. So it almost feels like the story on, say, AI and gain on it is kind of overplayed here. I'll also bring up the point, Paul and Tom, Paul especially, Tom used to do this thing called Chart of the Day. Back in the day, he used to do a thing called Chart of the Day. And then he gave it to me, And I once did a chart of the day on Apple every time it hit its $1 trillion milestones, 1 trillion, 2 trillion, 3 trillion.
Yeah.
Every single time it hit that, it triggered a broader sell-off in the S&P 500. And that's something you are not seeing with Nvidia. So bringing it back to the AI story, it feels like that's more of an Nvidia story than in the broader market.
Can we remind ourselves that Apple has 100,000 employees and Nvidia has 29,000?
Yeah.
I mean, I have real trouble with apples and apples here.
Yeah, exactly. So, Creedy, is there concern out there in the marketplace? Are we hearing anything from the street that, boy, if tech doesn't continue to lead this market higher, then maybe this market is at risk?
It's absolutely a possibility, but it's that concentration risk we've been talking about, I want to say, for the last 10 years or so. Even in January of 2019, before the COVID crash, it was the exact same narrative. Tech driving the train higher, valuations so overextended, every technical signal flashing red. But I remind the audience, I don't think anyone has said it better than our favorite tech bull, Dan Ives, over at Wedbush, who believes that they'll only keep rallying. And he said once that if you worry about valuations or if you worry about the sell-off, you would miss the IPOs of the likes of Facebook at the time, now known as Meta, and other of the major tech stories. So I guess the bigger question, I'm going to answer your question with a question, Paul, is do valuations even matter? And every person we ask, it says no.
Yeah, and that's what makes me nervous here. Creedy, so what are we hearing here in terms of the next drivers, the next catalyst for this market, one way or the other? Is it the Fed? Is it earnings? It's you kind of wonder what the next data point is the market's going to focus on.
Let me give you a fun third option, Paul, if I can. And I think that's going to be fiscal spend, actually. And I think that's where the election risk, the geopolitics you're seeing in Europe really matter, because the question is, where's the money coming from? Where's the investment coming from? We talk about it from a corporate standpoint, where you have your biggest companies investing in AI. You have it from potential stimulus measures coming out of the government that are now starting to drain out. What about things that change trade policy altogether and could very much change in as low as 6 months in the States, but are happening right here, right now in Europe? That seems to be where the narrative is, in that if any country, name your country, says, hey, we're going to spend more in defense, suddenly defense stocks rally. I think that seems to be the catalyst people are looking for.
Surveillance Royal Correspondent Creedy Gupta. Of course, Princess Anne with a horse accident in the last 48 hours. And I guess the headlines, Creedy, is she's resting in hospitals. Princess Anne, is she okay?
I believe she is expected to make a full recovery, but the royal family's had it tough, Tom. First with King Charles and then with Kate Middleton,
brutal.
of course,
Just
making
brutal.
making her appearance at the Trooping of the Color. So hopefully we of course wish them well.
Creedy Gupta, Royal Correspondent, Bloomberg Surveillance. Thank you so much. It has been a most difficult year for them with cancer. And the headline here from the Telegraph in London: Princess Anne spends second night in hospital with minor head injury.
Yeah, talking a minor head injury and concussion thought to be caused by a horse. That's according to the BBC.
And of course, we'll continue to watch that with our Surveillance Royal Correspondent, Creedy Gupta.
Exactly.
She's read in on everything. I mean, it's a miracle.
I know.
How she does it.
That's why we have her in the European financial capital.
The whole Nvidia thing, I don't know what to make of it. I have no pearls of wisdom here at all. I have one of their things in my computer at home.
You do?
I have a
thing.
Graphics, like old Nvidia.
For the gaming stuff?
Not gaming, but just it makes it run smoother. I think I can tell it's better. But that's not the new Nvidia.
No.
The new Nvidia is... What do you think? I walked by the Microsoft store in Fifth Avenue yesterday. Is it working?
I think so.
Chat GPT?
I think people use it. I think that people use it. Matt Miller's a big Chat
GPT at home?
Yeah,
they do.
See?
Where's the control room camera? We got to get,
I know.
To wake them up for that answer.
Write a report on, write a book report. Give me 600 words or give me 10 pages on, Albert
We had
Einstein.
somebody in that was like, Anastasia Amorosa
Yep.
at ICAP was just massive on it.
Yeah.
Like mental nuts about, she's using it all the time.
Yeah.
They had McDonald's, I think, they had takeout. They were experimenting with AI. It didn't work out.
No.
Somebody got 260 Big Nuggets.
Exactly. I mean, I've heard that some of the accents and things like that are challenged, but they'll get there.
Really interesting times. I really want to emphasize tonight, Carol Massar, Tom Stevanek, Look for the FedEx earnings. I'm sorry, it's a big deal. It's always important to begin the earnings season coming out of the second quarter.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Seeing a slight lift to the markets for the NASDAQ and S&P futures right now. This says shares of Nvidia bounce back before the bell, sparking that speculation that a three-day sell-off that wiped out more than $400 billion from Nvidia's market cap was overdone. Shares of Nvidia up more than 2%. So we have NASDAQ futures up 0.3%, 75 points. S&P futures up 0.1%, 10 points. Dow futures, though, they're little change, down about 31 points. We have the two-year yield at 4.72%. That's little change. The yield on the 10-year 4.22%, and that is little changed. We have spot gold lower, 2,328 an ounce. Brent crude at about $85 a barrel. WTI crude $81 a barrel. A big move from Ozempic maker Novo Nordisk. Those ADRs up nearly 2%. The company saying it's going to invest more than $4 billion to build a plant in North Carolina. Now, meanwhile, China, they've approved the company's drug Wegovy for weight loss management. declined. And another high-profile drug failure for Merck. The company says it will discontinue development of the drug for the treatment of head and neck cancer. Its shares are little changed. And to the luxury market, where sources say French billionaire Bernard Arnault, well, he's taken a personal equity stake in Cartier parent company Richemont. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. And that alludes to the tour de force by Brad Stone and Angelina Raskoy today about Mr. Arnault. And Richemont would be something. I'm sure he would. I believe they own Cartier, and I've never been in a Cartier.
Of course
but,
not. No.
I mean, Lisa, that would be a big deal to see Cartier go over to LVMH.
That would be a huge deal, but I have to admit, though, I have not been into a Cartier.
No, I don't. I just avoid it at all costs. Is well, economic data. It's tertiary. Fed non-manufacturing better than expected. Chicago Fed national activity better than expected. A little blinky on the screen, but we're waiting for housing. There's a lot of housing stuff coming out.
We're gonna get some housing around that 9 o'clock hour, Tom. So
we get GDP in 2 days. Mm-hmm. That's interesting. A third look at first quarter GDP. That'll be interesting. Our economic indicators always brought to you by Commonwealth. Join over 2,000 independent financial advisors taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. We thank Commonwealth for their leadership of all of our economic work. This is important. I said earlier with Mike Wilson, we protect the copyright of all of our guests. We're going to protect you from Winnie Caesar, global head of credit sites, because she writes the most specific, detailed fixed income, Frank Fabozzi mathiness of anyone on the street. Winnie, thank you so much for joining. Can you translate the character of the narrow spreads, price up massively, yield down like treasuries within the OAS and the SOS and all the other S's that you talk about in your world? What's the character of this bond market price up?
So the character of the bond market is that people are feeling really confident about the economic outlook and fundamentals. And that's a massive shift from where we were, just 12 plus months ago when we were still kind of recovering from that regional banking volatility and people were worried about another financial crisis. And now we're just getting paid a lot less to actually add credit risk to portfolios, which is leaving us a little bit more cautious overall.
Winnie, I'm looking at INGO on my Bloomberg terminal. That gives me the Bloomberg Index browser.
You showed me that.
It's very cool.
It's very cool.
The Bloomberg U.S. Ag total return value unhedged year to date up a whopping 0.01%. If it weren't for a strong November, December last year, it would have been negative last year. 22, we all know, is a brutal year. How do you make money in fixed income today? Do I just buy them and hold for the coupon?
It is a really tricky trade for sure, and duration within portfolios for the past few years on a long-term basis has been an absolute headwind. This has been an odd cycle where you have wanted to add asset classes that are a little bit less liquid, like private credit, because that is outperforming the public markets. And you've also been wanting to add just more yield and floating rate exposure to portfolios like the broadly syndicated loan market, the high yield CCC market. But we do think that we are at an inflection point. The propensity of credit risk to outperform in the next 12 months or so, we think is becoming a lot less likely, and we're getting more constructive on adding that duration risk to portfolios.
How do you feel about credit risk here? Do I stick with my U.S. government stuff, or do I go out and try to take some credit risk here?
So I think that people have been adding credit risk probably for the last 6 to 9 months pretty aggressively. And this has left the lower rated parts of the market, so triple Bs and investment grade, single Bs and triple Cs in high yield, looking a lot more rich than they once did. Now, we still like adding some credit risk to portfolios. We think that the high yield double B market is a nice sweet spot of pretty solid credit fundamentals combined with elevated yield, a little bit more spread than in the investment grade market, kind of more middle of the road duration. But we are saying that an up in quality bias is probably merited because a lot of that rich stuff is just, getting cheaper, all things considered.
When you help me with, I'm looking at the Bloomberg aggregate corporate yield to worst. The higher yield is priced down. And on a technical basis, I haven't even reversed on yield to worst to a trend of price up, yield down. When do we see that? When do we get a healing market based on yield to worst?
That's a really good question because we have seen yields kind of steady despite very volatile underlying treasury yields. They've been all over the place for the past couple of years at this point, and spread volatility as well. And I think that highlights there's this push and pull between buyers who are really focused on yield and are looking at IG at north of 5% and saying, hey, this feels like a long-term, very positive trade. And then the buyers who are very focused on spread, who might be saying, corporate credit relative to perhaps the mortgage-backed security market or even just U.S. Treasuries is feeling a little bit more rich.
Winnie, I look at where we are, and Paul mentioned, do you take the coupon or not? How do you look at bond strategy now? Not so much clip the coupon, but out 5 years. Do bonds have a place in the mix out 5 years?
Well, I certainly hope so, Tom, or else I'm out of a job.
Well, that's part of it. Everybody's talking, but you're such a grizzled pro. Come on. Everybody's talking their book in bonds. Forget about that. We have listeners and viewers that want to know, can they make money in bonds? Can they?
I think that they can. When you look at bonds relative to equity valuations, we all know there's been a pretty tremendous run in equity valuations. If you look at the forward earnings yield for, say, the S&P 500, it's fairly attractive. But the investment grade yield to worst is much more attractive, especially on a long-term historic basis. So unless you're an absolute believer that we're just going to continue to make a new high after new high and that earnings growth is really going to be delivered for equities, it's kind of hard to say that bonds don't have a place in portfolios.
I mean, when you're lighting up YouTube, the live chat right now, you're lighting it up. I mean, think about it, Paul. Kathy Kaminsky up at Alpha Simplex has a Jean Miro in her bedroom. Some of our people in their Zoom shots have Mark Rothko's, or, they'll have an Andrew Wyeth if they're more. You've got, who are the cherubs that have made the artwork behind you that we see on YouTube? This looks like fine art of the highest level.
Big shout out to Abby and Joe, my favorite little artists.
So are they still pleasant and cheerful, or have they grown up and they don't speak to you? Which is it?
So far, they are pleasant and cheerful, and hopefully that lasts a little while longer.
To Labor Day. Thank you, Winnie Caesar. Thank you so much for credit size. John Tucker, do you have the artwork of your children?
No, Winnie, here's what instead of collecting all this stuff, take a couple that are awesome and get them really nicely framed. And you have them for years to come. Mine are 25
I've never
and
seen
20.
you this sensitive.
I'm very sensitive.
He's a very sensitive guy.
It's his birthday.
Oh, you just thank you. Winnie Caesar, just fabulous. I can't say enough about Credit Insight's sophistication in analyzing the bond market. Quickly here, Bloomberg Surveillance, always brought to you by Interactive Brokers. Discover the future of trading with our next generation trading platform, IBKR Desktop. Download IBKR Desktop. Do that at ibkr.com/desktop. With our news in New York City, it's his birthday, John Tucker.
Oh, brother. Anyway, as we gear up for Thursday's debate, voters headed to the polls today for primaries in New York, South Carolina, Colorado, and Utah. Let's get more in this report from Bloomberg's Amy Morris.
In New York, Representative Jamal Bowman, a member of a bloc of hard-left Democrats known as the Squad, is this cycle's first Democrat in danger of being rejected by his party's voters after his criticism of Israel sparked an effort to remove him from Congress. Bowman faces a challenge from Westchester County Executive George Latimer. In South Carolina, Mark Burns, a Donald Trump-endorsed pastor, faces Sherry Biggs, an Air National Guard lieutenant colonel, in a Trump-friendly district. In Utah, 4 Republicans, including one backed by the cryptocurrency industry, are on the ballot for the Senate seat of Mitt Romney, who has decided to not seek a second term. In Colorado, Representative Lauren Boebert is seeking re-election in a new district and is expected to win her primary over splintered opposition. In Washington, Amy Morris, Bloomberg Radio.
All right, thanks, Amy. And this congressional primary day, another day of debate prep for President Biden. He's been at Camp David since the weekend, huddling with aides to prepare for the showdown in Atlanta with former President Trump and beat back concerns about his age and fitness. Tina Fordham is a geopolitical strategist at Fordham Global.
Arguably, the bar is higher for Joe Biden because there has been this relentless kind of narrative about him being a doddering, old fool. And Trump comes out guns blazing with, what is really also a meandering way of expressing himself.
That's Tina Fordham at Fordham Global. WikiLeaks co-founder Julian Assange is pleading guilty to leaking U.S. national security secrets and returning to his home country of Australia. This comes under a deal with the Justice Department that ends an almost 15-year battle over his prosecution. At Israel's Supreme Court ruling today, the military must begin drafting ultra-Orthodox men for military service. This is a decision that could lead to the collapse of Prime Minister Benjamin Netanyahu's governing coalition as Israel war in Gaza rages on. Most Jewish men and women in Israel are required to serve mandatory military service at the age of 18, but the politically powerful ultra-Orthodox traditionally received exemptions if they were studying full-time in religious seminaries. Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg.
Vote of confidence Tuesday. Here it is. Goldman Sachs initiate coverage on Paramount Global with a sell.
Yeah.
Price target $9.50. Down. What's that? That's down 10% from about 6%. That's brutal.
I mean, what that tells me is they have little to no confidence that Paramount will be acquired anytime soon. I mean, the fundamentals could certainly support, a cautious look at Paramount, but you'd be tough to put a sell on this thing if you thought there was even a remote chance of a bidder coming in and paying $12, $15, $20 a share here. But this tells you that this
their price target is 4 pennies below the recent low, Paul.
Yeah,
well.
So again, another tough day for Paramount stocks.
How about they got debt like an airline? 67%.
Yeah, it's tough.
This is brutal.
It really is, and that's why the Sumner Redstone's family finally made the decision, arguably several years too late, but they finally made the decision to sell. Which this is the crown jewel of their entire family net worth. So it's going to be an issue here. You got $16 billion of debt. And you got EBITDA of $3 billion, so it's kind of tight there on a debt to EBITDA basis.
What do you watch on Paramount? I mean, I don't even know.
No, I don't. Well, actually, I'm a big fan of this. I'm a big fan of what's that cowboy thing?
I was just going to say the cowboy movie. Kevin
Costner's vehicle.
Yes.
He's leaving. Maybe that's why.
Yeah, he's leaving. Yeah, exactly. Okay. So, and Blue Bloods. I'll watch Blue Bloods.
I'm looking at the website. $5.99 a month. How do you make money on $5.99 a month from New York City? Paul Sweeney on Paramount. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got a mix of red and green on the screen. The green coming from NASDAQ futures up 0.3%, 68 points. S&P futures also up 0.1% or 6 points. Dow futures down 0.1% or 72 points. We have the 2-year yield at 4.73%. That's little changed. The yield on the 10-year 4.23%, and that is little changed. We have the Japanese yen 159.62 against the dollar. Bitcoin seeing a bit of a rebound, up 2.5% at 61,077. We have a leadership change over at Target, the retailer searching for a new chief marketing officer. And that really comes less than a year after naming a company veteran to that role. Target down about 0.1%. And it's a fourth recall for Tesla's Cybertruck in the U.S. This time, it's to fix problems with trim pieces. They can come loose. The front windshield wipers, they can probably fail. It affects more than 11,000 of those trucks. Tesla shares, they're up about 1%. And Ford, they're also recalling some pickup trucks, about 550,000 of them in the U.S. Transmissions can unexpectedly downshift to first gear no matter how fast you're driving. Ford down about 0.1%. That is your Bloomberg Business Flash. Tom and Paul.
$61,000 is what I'm a quick look on the internet. Is Paul, one drove by me. I just don't get it.
No, me neither.
Help me.
No, I'm not. I can't help you at all.
It looks like it's out of a Mad Max
when
movie or something.
when you're in a Costco parking lot, there's got to be a Cybertruck, right?
They could sure fit a lot of stuff in there.
They can't park there, so why they can't get in the parking spot? And now they're doing recalls?
Recalls, 11,000 of them.
Okay, yeah. I really want to explain this pedigree because this is great. Paul, this is someone another Duke grad. Oh my word, Howard Moseson.
Yep.
Like for years, iconic at Citigroup and all that, and did the McKinsey route, and he ends up at Huntington Trust, and this is like really important. Like you and I talk to people in 3 zip codes,
right?
Lisa 4 zip codes, but at Huntington Trust, Howard Moseson's driving the ship.
He is, and he's got a good team over there at Huntington National Bank. They're in Columbus, Ohio, Tom. They are the bank of the Matthew Miller family clan. The Huntington
Bank. I did not know this. So
they
finance all the EVs Matt Miller's underwater on?
Exactly.
Great.
So full disclosure, Ian Wyatt joins us. He's a director of economics and commercial market strategist for Huntington National Bank. They're based in Columbus. Ian's based down in a little banking sector called Charlotte, North Carolina. Ian, talk to us about this market here. What do you see from your clients at the Huntington National Bank? Your retail customers, your corporate customers, your middle market customers. How concerned are they about this economy? What are they seeing today?
I think since the beginning of the year, especially manufacturers felt it was a bit slower. They saw a little bit slower demand, a little more tepid, but you're definitely seeing splits. If you're in construction, when I talk to construction companies across the Midwest, I really thought this was going to be a rough year. I looked at multifamily market, you're seeing a lot of oversupply, particularly in, say, the Southeast, thought that was going to slow. But we've seen that hold up really well. It's a lot of mega projects out there. If you're in services, if you're doing experience-based activities, we're seeing really strong demand. So it's a bit mixed. I don't think they're as negative as some of the recent tone-outs, but I don't think they were as positive early in the year either as we were.
How about this labor market here? It's been one of the pillars of this economy, how strong it's been. Now we've kind of inched up a little bit close to around 4% unemployment rate, but that's still darn good. How concerned are you guys about this labor market as you think about kind of this economy?
I think for employers, it's shifted a lot. We've seen it's a lot of turnover's way down. The JOLT survey that when I spent a decade at BLS, no one knew what the JOLT survey was. Now everyone loves it.
It's on our Bloomberg terminal. We got it.
Yeah. JOLTS is a great survey, and so we're seeing turnover down. We're seeing continuing claims ticking up. We are seeing a little slower labor market. I think it really depends on what space you're in. If you're talking skilled construction labor, skilled manufacturing labor, that's really tough to find. But if you just want a gas station attendant or honestly a banker these days, it's a bit easier to find one of us.
How about
go ahead.
How about commercial real estate? That's like for Tom and I, we think like, boy, there's got to be more shoes to drop here in this commercial real estate. How do you guys think about it at your bank?
I think we've been managing that exposure pretty carefully for several years now. We started working that down a bit, so have one of the lower exposures amongst the regional banks to commercial real estate. I think it really is that BC office story is pretty weak. A is still holding up reasonably well, or at least has occupancy and there's a revenue stream. It's really the fear, of course, is those BC where it's 20% occupancy.
I don't want to get in trouble with the general counsel at Huntington Bank, and I don't want you to speak for the executives of the bank. They've been very active here, folks, about cost efficiencies, closing branches, and all that. But at the same time, as an economist and strategist, you have to parse real estate. Is there, in this panic, is there an opportunity away from office B and C class?
Yes, I think there is. And one of the interesting things I'm hearing from clients out there, and when I'm talking real estate, they say in a lot of our Midwest markets where we have strong presence across the Midwest, is that it's really small office space. They're not having a lot of trouble leasing. They're getting, you need a little travel agency, a little law firm. Those spaces they can do. It's the 10, 20 floors of a downtown office building is where there's more of a struggle. So we are seeing a bit of a split. I think you're seeing the same split in industrial right now. There's definitely an oversupply of the mega warehouses, those mega distribution warehouses you've seen built all along, the Jersey Turnpike or along I-85 across the Southeast. But if you want an in-town plumbing space, we were looking at one company recently, 98% occupancy across their portfolio.
And Paul, Cincinnati, Ohio, long-term unemployment rate 6.4%. Right now it's 4.4%.
Right, yeah,
and that's that vibrancy that Diane Swank, among others, talks about.
Here's a term I haven't heard before, Tom. Auto alley. What is auto alley, and how do you guys do business there?
Sure. It's historically, the auto industry really started, of course, in Ontario, Canada. We always think of it, it really was a North American auto industry, and followed I-75 and 65 all the way from Detroit and eventually down to Alabama when Mercedes-Benz makes it down there. And you saw all the parts plants. Almost, if you look at a map of the parts plants and the assembly plants in the United States, almost all of them are somewhere along that corridor and near interstates. Now, I think you're seeing a shift with the new EV and battery plants, and as they're building these plants, they're definitely going into Ohio. We're seeing good growth there in Indiana and some of the traditional auto heartland there. But it's shifting more southeast, South Carolina. So South Carolina, of course, famously has the BMW plant, which did huge things for the state up in Spartanburg, largest BMW plant in the world. But now Scout is going to be, which is VW's resurrecting the old Jeep competitor, Scout.
They're bringing back the old Scout, like the success they had with the Bronco with Ford.
Yes, and it's going to be Columbia. They're building in Columbia, South Carolina. They're building a plant there. We're seeing Toyota doing a battery plant in North Carolina. Previous role, I was involved a bit in Hyundai selecting Savannah for their EV plant, and one of the big competitors, another area they were looking at, what they saw in south side of Virginia, south of Richmond, was just they didn't like the demographics. They said, this is too old. We're going to have a hard time finding workers. And I think
he's looking at me when he says too old.
South side of Virginia, Richmond, okay. So that whole area is kind of just the traditional auto alleys kind of moving a little bit southeast as they think about this electric business. And that's kind of right in your wheelhouse for your bank?
Yeah, so we've recently expanded middle market into the Carolinas and Texas.
Right.
So we've added 60 bankers in the Carolinas alone.
So what's your unemployment rate? Quickly, you're running out of time. What's your unemployment rate 12 months out?
I think it ticks up a little, but we hold fast and we keep growing.
This is too much optimism. I think we're never have someone from Ohio in again. It's too much optimism.
Exactly.
I think a couple tenths up.
Ian White, thank you so much. Greatly appreciate it. Huntington Bank, that was just too much.
Too much.
Down to the south.
I didn't know about auto
growth, optimism, employment. How many bankers did you hire?
We hired over 60 bankers now in the Carolinas
that's
alone.
More than the whole island of Manhattan combined. In honor of Mike Wilson, in Morgan Stanley, we're featuring music from 1965 as he alludes back to the Nifty 50, which is just after 1965. And this was, an amazing song. They just figured it out, and it was a ginormous hit for a kid that grew up in Beverly Hills. And they brought in the major players in Beverly Hills, and they did it. It's 1965. We're going to play Petula later. You don't know who Petula is?
No, I do not. Petula Clark?
Yeah,
Yeah,
nailed
there
it.
we go. Okay, boom. There we go.
Wait, you're exiting.
I am. Well, I got to do. Rich is making me stay a little bit longer, but I'll get out eventually.
Let it shine for you.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Bloomberg Surveillance. Tom Keene and, well, I don't know, it's out there. Paul Sweeney on his way to Bloomberg Invest. Lisa Mateo saving the day. Lisa Mateo joining me in the hour as well, which is always a good and beautiful thing with a real perception there about what we're doing in this economy, because all the economy people are looking at the Fed and all that, instead of looking across the American landscape. Lisa, I thought that last conversation was amazing and foreign to you and me, of the manufacturing boom on those highways south of Detroit.
I didn't know about the whole auto alley that he was talking about, that certain auto alley that
it's been there,
in Canada.
It started in Windsor, Canada, and as Diane Swank has a great leadership on this. There's just this whole boom that's ignored by financial America. When you hear 60 bankers at Huntington Trust hired, well, that gets your attention as well. Your attention is to the markets, red and green on the screen. This morning, the VIX 13.43. I'm watching the 10-year real yield 2.02%. We begin in this 9 o'clock hour our coverage of Bloomberg Invest. Shonali Bassick doing a great job on that. Romaine Bostic scheduled to be with us in this hour as well. Of course, it is the Interactive Broker Studios. We thank Interactive Brokers for their efforts with our Bloomberg Business Flash. A brief, Lisa Mateo.
You got it. And we do have a bit of a mix this morning. We have NASDAQ futures. They're up about 0.4% or 81 points, 19,832. We have S&P futures up 0.1%, 8 points, 5,526. But Dow futures down 0.1%, 77 points at 39,766. We have the 2-year yield 4.73%. That's up 1 basis point. The 10-year yield 4.24%, and that is little changed. I want to take you over to commodities. Spot gold lower, $2,324 an ounce. We have Brent crude $85 a barrel, WTI crude $81 a barrel. Shares of Microsoft down about 0.1%. The company facing an antitrust warning from EU regulators. And then Apple's shares, they're up nearly 1%. Sources telling Bloomberg the company turned down that AI partnership with Meta months ago, and that was over concerns of its privacy practices. That is your Bloomberg Business Flash. Over to you, Tom.
Thank you so much, Lisa Mateo. And good morning to all of you out on Android Auto, Apple CarPlay. It's smarter, it's better. And on YouTube, of course, search and subscribe. At Bloomberg Podcast, they gave me a brief yesterday. Ray YouTube showed up. He's on like a world tour. I haven't seen him in months. And Ray YouTube runs all of my YouTube stuff. And he says, like, the whole subscription thing it's building. You know, at Bloomberg Podcasts, find it. It's got lots more. It's got Carol Masser. What do you want? I mean, it's got Bloomberg Business Week with a great LVMH article today, and it's got a great YouTube live chat. I've tried to participate this morning a little bit as well. So we couldn't get Alanis Morissette after she sang the national anthem at Game 7 of the NHL last night. So we did the next best thing. From Montreal, joining us, Francis Donald, of course, with Manulife. Francis, the Canadian team didn't win the Stanley Cup last night. Heartbroken?
Every year, but you learn to move forward.
You learn to move forward, and it's true. It's been like 30 years or even more. Francis Donald, on this American economy, is it moving forward?
Well, it is moving forward, but what does the new forward look like? I do believe that we're at a tipping point here. So for the last year and a half, I've heard everyone use the term normalizing. Things are coming down from their peaks, but they're normalizing, and that's a good thing. And I've always thought that was a bit weird, because in past cycles, we wouldn't have used the term normalizing. We would have said it's weakening off the highs. And I've been waiting for that moment when we stop using the word normalizing. And I think we're on the cusp of that, Tom, because just about every indicator now in level terms is about where it was right before COVID, which, by the way, was not actually a position of strength. And so now I'm asking myself, what comes after normal? And I think that should be the key question for everyone.
We haven't even brought this up in days, folks. I've been remiss on this. Okay, we're back to 2019. I get that. I do the same thing you do. The Bloomberg Terminal, folks, is great for this. You can get right back to where things were on whatever the series is in 2019. Except our debt and deficit and our interest expense at the federal level, Francis Donald, is not 2019. Do you care?
Oh, absolutely you care, because one of the main engines of this so-called normalization, this resilience, the economy has behaved so well, even though we've gone through one of the fastest, tightest monetary policy restrictions, was government spending. This didn't just happen in the US, it happened globally. But now for every $100 that the American government takes in, they have to spend $19 on interest expenses. And that's super relevant for two reasons. The first one is that it's going to restrict just how powerful fiscal can be moving forward. forward, it doesn't even matter who wins the election. They will hit up against market limitations. But the second is, I think, the Fed has this dual mandate, price stability and full employment, but of course they're watching. Of course they're watching the interest costs that are on the federal government, because it flows through in the end to how strong this economy can be in perpetuity. So that is a huge differential. And I think what's really clutch is we differentiate between what is truly a normalization and what are the long-term structural changes that have occurred here.
Is the equity market delinked from the U.S. economy?
Absolutely. But it always has been, Tom. I mean, for years, I've been an economist and a strategist, and it's great when the jobs are the same because I don't have to work as hard, but often they end up being very separate. And you've had plenty of guests who have talked about just how this is not really as broad as it should be. But at the same time, if we're talking about how do things behave normally, I'm not actually shocked to see the equity market doing fine right now. Even though we've been nervous about the U.S. economy, we know that market can persist right up until the Fed's first rate cut, right until you see real damage in the labor market. That's just not here yet. We do think it'll come, but we still got a couple more months. So you can be really concerned about where the economy will be in 6 months and still say it's not time to pull back on risk just yet.
Yeah, Francis, in the short time we got left, I've got to go back. Folks, I went up to Toronto to see the Devils play the Maple Leafs, and Francis said, well, let's do a panel. So we did this riveting panel with Francis Donald, packed room. Thank you, Bloomberg LP, for arranging that. And Francis, I was thunderstruck by the Canadian economy, the turmoil, in immigration. What lessons at Manulife have you learned in your economic study of immigration and substantial immigration, migration maybe, in Canada? What have you learned?
It's a great question, Tom, because we have a lot of American economics now focused on this increase in immigration. Well, if you want to know what that does to an economy, ask a Canadian. We've had 3% population growth, some of the largest population growth that we've seen on record. And in the end, it should be supportive of your economy, but it has actually made it really, really difficult to see what's going on in the data. And that's because even though growth, the pie has become bigger, GDP has been larger, GDP per capita, the pie available to each individual Canadian, has been shrinking for 2 years. And therefore, those who look at the economy in aggregate have been able to say the economy is resilient, but actually there has been less per person going around. We've had trouble calculating the data. We've had trouble getting a sense of the true underlying strength. It's been a big challenge for not the statistical agencies, but also the central banks. The U.S. is dealing with a small version of this. I think there's much more robust data in the United States to get a sense of it, but large-scale immigration makes an economist and therefore a central banker's job harder. There's no question about it.
Valuable. Francis Donald, thank you so much. Thank you again with David Rosenberg for that panel that we had up in Toronto. Francis Donald of Montreal and Boston. It is Manulife. Red and green on the screen, the VIX 13.41. With our news in New York City, John Tucker.
All right, Tom and Lisa, 2 days away from the first debate in the rematch between President Biden and former President Trump. President Biden spending the week at Camp David. He's doing intensive preparation with his aides, while Trump is preparing in kind of a loosely organized session. Tina Fordham with Fordham Global Foresight says with 4 months still left until the election, not really clear how this debate is going to impact the race.
The debates rarely move the needle on polls, but it will generate headlines, and perhaps it will mean a bit more in a race like this, where so many Americans really don't like either candidate.
And our coverage of the CNN presidential debate that begins this Thursday night, 8 p.m. Wall Street time, with a special edition of Balance of Power from Washington and Atlanta. WikiLeaks founder Julian Assange has agreed to plead guilty in a deal with the U.S. Justice Department. That story in this report from Bloomberg's Ed Baxter.
Felony count of espionage will resolve a long-running legal saga that spanned multiple continents, centered on publication of a trove of classified documents dating back to 2010 and 2011. WikiLeaks statement saying this is a result of a global campaign that spanned grassroots organizers, press freedom campaigners, legislators, leaders from across the political spectrum, all the way to the United Nations. He will be in court on the Mariana Islands and then go back to his native Australia, not wanting to head back to the U.S. where he could face a lengthy sentence. Ed Baxter, Bloomberg Radio.
The U.S. Surgeon General today declared gun violence A public health crisis driven by the fast-growing number of injuries and deaths involving firearms in the country. The advisory issued by Dr. Vivek Murthy, the nation's top doctor, comes as the U.S. grapples with another summer weekend that was marked by mass shootings that left dozens of people dead or wounded. And Tesla is recalling its futuristic new Cybertruck pickup for the fourth time in the U.S., this to fix problems with trim pieces that can come loose and front windshield wipers that can fail. The new recalls announced in documents posted today by the National Highway Traffic Safety Administration each affect more than 11,000 trucks. Good news is the truck has not been recalled for just being too ugly. Anyway, global news, 24 hours a day, whenever you want it with Bloomberg News Now.
There.
Johnson, have you seen them?
Well, you drive an H2, so I can understand, you don't like the Cybertruck.
Yeah, but I have solar panels on the roof of
It's very futuristic. I'm not a big...
Futuristic?
I saw him driving down the road. I was like, what is that?
What is that?
They run into a little Hyundai or whatever. I mean, what happens? I mean, seriously, I don't get it.
It's like a tank.
Like you look where the fenders are, if there are fenders. And that. John Tucker joining us, of course, surveillance congestion reporter. John, I don't want to make jokes about it and the congestion thing's underway and all that, but you have a multi-decade experience with a third world thing known as the tunnels between New Jersey and New York. For our global audience, the headline here, this is from Gothamist, New Jersey Transit pledges to hold Amtrak's feet to the fire after continuing meltdowns. How does a guy who's dealt with this it's his birthday, he's 59, for 58 years, how do you deal with this, John Tucker?
Well, just go back. I mean, this is almost a weekly thing where New Jersey Transit leases the tracks from Amtrak. Amtrak owns that stretch of the Northeast corridor, of course, and they're always blaming Amtrak for the problems. It's a back and forth. I mean, hot weather, rails expand. Cold weather, they contract. And the D.C. circuits go through that as well as the above the train, the catenary lines.
Listen to you.
They sag during hot weather. So, yeah, I mean, you have problems.
I got stuck yesterday, not because of hot weather, because they didn't have enough people to man that certain train.
Oh, well, that's the one. They have had ongoing personnel issues,
Yes.
and that incorporates so many different things. But they have their problems. They need their funding. They're working on it.
Do you have in your head quickly 2030? 2040?
I would say 10 years before they get the tunnels into New York City. At least 10 years before we see new tunnels into New York City. That's a huge construction project.
Our surveillance congestion correspondent, John Tucker, there with an update. For all of you worldwide, gets above 85 degrees, the trains fall apart. That's all there is to say. Bloomberg Surveillance, good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Some more economic data out this morning. Home price gains in the U.S., well, slowed in April. The national measure of prices rose 6.3% from a year earlier. That was less than the 6.5% gain back in March. Now, in less than an hour from now, we get a read on consumer confidence. For reaction right now, we have NASDAQ futures still up about 0.4%, 89 points at 19,839. We have S&P futures up 0.2%, 11 points at 5,528. Dow futures down 0.1%, 76 points at 39,768. We take you over to the bond market. We have the 2-year yield at 4.74%. That's up 1 basis point. The yield on the 10-year 4.25%, and that's up 1 basis point. We had some more Fed speak. Federal Reserve Governor Michelle Bowman says she still sees an upside risk to the inflation outlook and is not ready to cut rates just yet. Moving the markets, Airbus shares in France down more than 11%. The company dialing back forecasts on everything from operating profit to jet deliveries. It's saying it's coming up short on the parts that it needs to make those planes. Airbus suppliers like Rolls-Royce also trading lower this morning. And shares of Spirit Aero Systems, they're falling down more than 3%. Reports that Boeing switched its proposed funding from an all-cash offer to a deal funded mostly by stock. Boeing down more than 1%. That is your Bloomberg Business Flash. Tom.
Lisa, thanks so much. Greatly appreciate it. Love the single sentence here in The Athletic. Always doing a great job in The Athletic. This is Steve Buckley, of course, writing up in Boston. And, he just sort of says it. These are not the Manny Ramirez, David Ortiz Red Sox, and there's no Pedro Martinez. They've won 10 of the last 12. Celtics showed up last night at Fenway Park. Joining us, Surveillance Red Sox correspondent Michael McKee. It's almost fun, but we're not to July yet. There's still lots of time.
Well, what's fun about it is that nobody expected the Red Sox to be good this year, and
they're in a wild card spot.
Course,
I checked.
Yeah, of course, Boston fans always expect them to be terrible, including somebody we know here. Yeah. But they have played much better than expected, and the whole thing that happened over the last couple of years, where they traded off veterans for rookies and draft choices, seems to be paying off. To a certain extent, because Jarren Duran and this Ceddanne Rafaela, he's fantastic. They are leading the team, and the pitching has held up better than expected. So overall, good news for Boston fans. Now, they came from behind last night. I did not watch the end of the game. I had to watch the hockey game. Yeah. I'm sure you were too.
Yeah, we covered that. It was great. Alanis Morissette sang the national anthem, which was a killer. But maybe Alanis Morissette can sing the national anthem at the next Fed meeting. I'm suggesting, Mike, that we've moved from micro Fed analysis over to actually looking at the real economy. Is the Fed able to do that? Can the Federal Reserve System move from the parlor game of interest rate guessing over to actually what is going on?
Well, I think that's what the Fed is doing. It's not what the markets think the Fed is doing, or at least not what the markets are doing. Basically, the Fed does two things. It looks at the data and, quote unquote, is data dependent, because that's the numbers the actual numbers they have to work with. But they spend an enormous amount of time surveying businesses in their district and talking with various interest groups of people in their district to figure out what's going on right now. And the problem is the CEOs don't know any more than the data show at this point, that there's not a recession coming, and the economy is slowing as you would expect, so they're being cautious, and the Fed is therefore being cautious. I think the Fed is not as behind the curve as people like to say. I think they know a lot more about what's going on in the economy.
I agree.
It's a tribute to the way the Fed was set up, with 12 regional central banks that can keep a close eye on things.
Well, let's talk about that. We're going to rip up the script here. We could do that with Michael McKee. And the answer is, I'm going to go to the leadership of the St. Louis Fed, Melzer from years ago, where they said we need microanalysis. And of course, that was put on steroids by Greenspan, who, like Ed Hyman, wants microanalysis. Is this a Fed under Jerome Powell still doing the kind of analysis that Alan Greenspan loved?
Oh, sure. Not as much in a public data-facing way. We haven't heard about what Jerome Powell reads in his bathtub. But there are many, many more. If you go to the individual Fed bank websites, there are many, many more proprietary indexes that each regional Fed has come up with to track certain parts of the economy. The San Francisco Fed has COVID and non-COVID exposed stocks that they track. The Atlanta Fed has, of course, the GDP now and the sticky wage index. There are just all kinds of numbers that you can find. And they have to put all this stuff together and come up with an idea of what's happening.
Yeah.
I think the appreciation at the Fed has been that this is a much more complicated effort than just the one model that everybody thinks the Fed looks at, the Furbis model.
We got a wide expand of the super large ECO Go screen just to get this in. Mike, you are busy the next few days here. Do I care about the third look at first quarter GDP? Could it actually creep south?
It could, or it could creep up. The biggest thing with the third revision to GDP is there's usually not much of a change, and if you get a change, it's most likely in something like inventories. But it's going to be the PCE numbers on Friday that matter, the inflation and the spending numbers.
And what's your guess here? What's the street saying? What's the spread?
Economists are saying the median forecast is that there's no change in headline PCE, and there's only a slight rise in core PCE, and so it brings both the year over year and core down. And the good news is that's more good news for the Fed's argument.
Claims are 210. Claims are now 230. Maybe I dare say 240. Where's the Mike McKee tip point on where weekly claims showing just a certain part of the economy really matter?
Well, I think we'd have to see them go higher to really matter. This happened last year, and then claims went down again. Do they go down again, or are we starting to see companies lay people off? I think what you have to watch is for a stair step, not a big jump all at once, but slowly the low gets higher.
Aren't we in a stair step right now?
Well, it's only been 2 weeks. So I don't know that you can say that's a trend yet, but with claims, if they don't come down significantly and then they start going up and the bottom is lower than before.
And now, folks, the McKee Summer Conference Tour, Lisa Mateo and I are slogging through the 95-degree weather of Manhattan, and McKee is Rocky Mountain High. How many conferences are you going to this summer?
3 at the moment.
A hat trick of joy.
Yes.
Please outline their geographies for us for the Lake Ken Pruitt.
Well, this year they're kind of all centered around Jackson, Wyoming.
I'm shocked.
You're shocked. My favorite place in the world. The Global Interdependence Center has one, the Rocky Mountain Economic Summit, and of course our good friends at the Kansas City Fed at the end of August.
Oh,
and
look.
Lisa, I note that Tom doesn't tell you that he's going to that Fed one in Jackson Hole.
Here's
the only person in this room who is not going.
Here's the romance. McKee goes out for 3 weeks. Ellen Zentner just writing in going, how close is he to a trout stream? And he answers for 3 weeks the whole time. I get on a plane. I think this year, because Francine Lacroix has a Gulf Stream, I'm going through Atlanta. I get into Jackson Hole at like 10 p.m. The last time I did this, Jerome Powell actually held the door for me at the lodge. You wake up, you rest for a day at 12,000 feet or whatever it is. You know, I mean, I'm wearing a suit and tie. I'm not doing the LOB
Do you grab
thing.
a cocktail when you get in, or do you
And
go
then
right to bed?
we do the show, and then John and I and Lisa make a dash to the airport to come home.
That's
That's exactly.
But we do not understand that dash to the airport to come home, because why would you if you could stay another day or so?
Stay another day and go with McKee.
Interview a moose or something like that.
That's all you got.
The $1 million cowboy bar is where Mike and I end up. It's
there are photos.
There is evidence. There's even one video that's been suppressed to protect.
So what's the beverage of
innocent.
choice, quickly?
Oh, well, most people drink beer at the $1 Million Cowboy Bar. I knew somebody who ordered wine, and the way the waitress looked at her was...
didn't work out.
Don't do that.
Michael McKee with very busy economics in the next 72 hours. Stay with us. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene, Paul Sweeney on assignment. This is your opening bell report. Nvidia shares battling back after that three-day rout yesterday that wiped out $430 billion in market value. Now, that's the biggest three-day value loss for any company in history. How will those shares fare at the open, and how will it affect the markets? Let's get right to it as we start to open. We have the S&P 500 up about 0.1%, 9 points, 5,457. We have the Dow down 0.2%, 90 points at 39,322. The Nasdaq up 0.4%, 73 points at 17,570. Now we'll check in with Nvidia right now, up 2%. You see there. We go over to the 2-year yield, 4.73%, and that's up 1 basis point. The 10-year yield, 4.25%. That's up 1 basis point as well. We'll take a look at commodities. So we have spot gold. It's lower, 2,323 an ounce. Brent crude, $85 a barrel. WTI crude, $81 a barrel. After the bell, we move on to FedEx. Expected to point to that slow recovery in the freight market. We shall see. That is your Bloomberg opening bell report. Tom.
Paul Sweeney on his way downtown to Bloomberg Invest, and giving good coverage to that is the Tim Stenovich Show with Carol Masser. Look for that here this afternoon. And what's great about this, Tim, is you have one of my favorite people, Cliff Asness. I did a magical thing on a morning with John Bogle and Cliff Asness, and they were going at it and laughing. And there was just a great camaraderie about heated opinion on Wall Street. Mr. Asness of AQR, he's fired up, isn't he?
He is, and he's going to be joining Sonali Basak on stage at the Bloomberg Invest Summit. A big part of our program today is simulcasting what's happening there. It's an incredible lineup. We have Gary Gensler right at the top of the program at 2 o'clock. He's going to be speaking with Bloomberg Businessweek editor Brad Stone.
Brad's got to ask him about BitDog. I mean, it's off a cliff. It was under 60,000. I mean, a lot of people are going to say this is Gensler's fault, right?
Do you think, are you more of a fan of Dogwit Hat or of BitDog?
No, I like BitDog, but
BitDog?
You know, I lost money on Doge, so it was downhill after that. Who else do you have?
We got coming up later in the program. We're going to have actually the folks over at Odd Lots. Have you heard of these guys?
Yeah, I've heard of them.
The Odd Lots podcast.
They did a great interview with Tom Lee about higher stock prices.
He thinks stock prices are. I mean, is this guy a permabull?
Yeah, I mean, Tom,
I think it's fair to say.
The
What do you say, by
criticism of
2030?
Tom Lee would be that he's always bullish.
Yeah.
I'll take that point, but he's intelligently always bullish. Even bears have to listen to him.
So Joe Weisenthal and Tracy Alloway are joining us because they're doing a live podcast from Bloomberg Invest today. So
Okay,
you can
great.
catch that interview. My big question, I want to know how I get Mike McKee's job, because it sounds like he spends the entire summer fly fishing.
Oh, it's amazing. I mean, Ken Pruitt used to kill, for this. I mean, he goes from stream to stream. Ellen Zentner usually sets it out, and they're like these tour guys. McKee's such a hitter that he has Matt Lloyd is at Jackson Hole, and he hires him for they take him out where they stock the river. As Ken would say, the fish are the size of your leg. That's all he does.
Does Mike need anyone to carry his bags?
That's what he does.
All right.
Yeah,
The
Zentner and
special
Morgan
bag just for a cowboy hat.
Yeah, it's a tough life.
I know.
Tim Stenovich with us. Tim Stenovich, with the Carol Masser Show later today with a lot of important chat from Bloomberg Invest. So look for that. Right now, and I've been really anticipating this, Christopher Whalen joins us. His book, Inflated, of I'm going to say 15 years ago, was a waltz through the inflation and the leverage of the American financial system off of crisis. Chris Whalen, all will agree we have had a leverage, we have had an increase in debt and deficit off of the pandemic. Are we fragile at this stage?
We're more fragile than we have been. When the Treasury market is the biggest market in the country, I think we have a problem. We have flipped the whole traditional structure of American commerce, American finance on its head. So now the government, the public sector is the single biggest sector.
The money question then to Chris Whalen is, we've been here before, under different circumstances, war, whatever. What is the solution? What is the path that the United States of America does when it gets into this situation?
I think that eventually there's going to be a majority in Congress that is going to either let a lot of the tax cuts from the Trump era expire and thereby we get back to something closer to balance. And I think medium to long term, Tom, we have to have a national sales tax. We have to restructure the economy to focus on where the money is, which is the point of sale. This is a sales-driven society, right? So where are we going to get the money to run this country? It's with a national sales tax. That means most income taxes should go away. Politically, that's tough. I'm editing that part of the book, by the way. I've been having great fun going through that period. But, you know, typically inflation's been much more popular in this country than deflation. And you see that most recently. So, you know, I've said in commercial real estate, if we don't have 2% inflation every year, we have a problem.
No, that's fair. But what's important here is every politician and those in the know that a Canadian prime minister lost his job off of the VAT tax effort. Is the Wayland sales tax in America nothing more than a VAT tax in disguise?
Well, of course it is. But we have to decide if we have the courage and the toughness to govern this country, because otherwise we're headed down the road to Argentina. We have nuclear weapons and a big military, but there's not much else different. Look at Milei in Argentina. Listen to what he's been saying. It's brilliant. But he's in a society that's already 90% of the way on the road to perdition, right? So I think that we have a chance to fix this, Tom, is the short answer.
The skeptics, Chris Whalen, would say, okay, let's have a sales tax, but you imply that the income tax will go away. Nobody listening buys that for a moment, Chris Whalen. How do we do that?
Well, I think you limit it to the top income echelons, because let's face it, how do we pay for things now? It's the middle class. They're the ones who pay the bills. And if we decide we're going to fund 20% of spending with debt, long term, we're going to have an inflation problem. That's why it's so hard for the Fed to get to 2% now. We're running the economy hot. This is a classic situation. And for some reason, our society just can't have a discussion about this.
Chris Whalen with us, Whalen Global Advisors right now. Chris, I got a segue here in the time we have left to the banking business. The zeitgeist of surveillance is this is an office Class B, Class C issue, and the rest of real estate is fine. Somehow I think you disagree.
What happens, I think, is that you have that Class A building and everything else gets depreciated as a result. You see this in New York. You can have properties that are fine and properties that are not so fine. I think it's interesting that Brookfield just refinanced One New York Plaza, where I worked many years ago down at the bottom of Manhattan. We'll see how that turns out. But I think the use case changes in commercial property are episodic. They are, you know, taking us back over 100 years. Because remember, I was at Kroll. We rated many of these banks in New York. Their multifamily books were pristine. New York Community Bank, all of them. But the case has changed, and the politics has also changed, Tom. We're much more adversarial today in New York. And, you know, the real estate industry is figuring out that they have to spend some time and some money in Albany.
Okay, on a Hayekian basis, how do they clear it? How do we clear the challenges in Office BC?
I think we have to realize that the private sector and the political authorities in the big cities have to come together, and the federal government may have to help them finance it, because the numbers are really big. To think that the cities can redevelop their urban centers by themselves is fanciful. So I suggested that we dust off the Reconstruction Finance Corp, which you recall from my book, and that was a financing vehicle for many, many, many things. But today it's commercial real estate. We haven't had to talk about commercial real estate since the 1970s, and that was down in Texas. In fact, they still have some of those buildings here now, but look at all the new construction in Texas that has in turn made those C and B and D properties fall in value.
What do you
Same
say
thing in Florida, by the way?
Quickly here, what do you say to the gloomsters who say this is 1907 or 1870 again, or I think it was 1837, I can't remember. But do you look at it as apoplectic, or can we get through this?
We could get through it, but we have to understand that if we inject a lot of inflation into the system, eventually it will deflate. So, you know, over the past decade, we've had easy money because everybody was stunned by the 2008 crisis. We were broke for years, you remember. And now we have a situation where we put so much liquidity into the system that the Fed can't even manage the mandate. It's almost a joke. So I think we have to realize as a society, and this is demographics really coming at us in many different ways, right? That, the baby boom is over, and we have to figure out how to govern ourselves in a reasonable way without running big deficits every year.
Too short. Chris Whalen, thank you so much. Whalen Global Advisors here anticipated his new book, a substantial update on his classic Inflated of a good 15 years ago. Red and green on the screen. Dow a little bit south here. NASDAQ finally with a lift up 0.3%. I'll check Nvidia in a moment. Bitcoin, Paul Sweeney on the way to Bloomberg Invest. Somehow Bitcoin will come up 61,000 even. With our news in New York City, John Tucker.
All right, Paul and Lisa, we are just a couple of days away from the first debate in the rematch between President Biden and former President Trump. Biden's spending the week at Camp David doing intensive preparation with aides for the upcoming debate, while Trump preparing in loosely organized sessions. We get more from Bloomberg's Bill Ferries.
At some level, it's make or break for both men. There's a lot of pitfalls they're both facing, but certainly for President Biden, who seems to still be behind in a lot of the battleground state polls, he cannot really afford a slip up or a moment where he either appears confused or forgets something. So he is, I think the pressure is in some ways more on him.
Bloomberg's Bill Ferries, and our coverage of the CNN presidential debate that begins this Thursday night at 8 p.m. Wall Street time with a special edition of Balance of Power from Washington and Atlanta. Listen on Bloomberg Radio or watch Bloomberg Television. Hours after the news broke of WikiLeaks founder Julian Assange's deal with the Department of Justice that would effectively end his incarceration and allow him to return home to his native Australia, Julian's brother Gabriel Shipton said the family is ecstatic and eagerly awaiting his return.
I've been speaking to him this week and just going through all the details with him, and very anxious, very excited, and he's looking forward to spending time with his family and being free.
As part of the deal, Assange will appear in court in Saipan to plead guilty to a single charge of the Espionage Act. If the deal is accepted by the judge, Assange will avoid any further prison time. Israel's Supreme Court ruled today the military has to begin drafting ultra-Orthodox men for military service. And this is a decision that could lead to the collapse of Prime Minister Benjamin Netanyahu's governing coalition as Israel wages war in Gaza. Most Jewish men and women in Israel are required to serve mandatory military service at the age of 18. The torrential rain continues to pound the Midwest as officials in Mankato, Minnesota warn the Rapidan Dam could fail due to the record water level, the latest major structure damaged by these storms. And we got a taste of it in our area over the weekend. That was rain that I haven't seen in a long, long time. There were windows in my house that have never leaked. And they were just gushing water.
It was south of me, and the lightning bolts. I can, what do I know? I'd never seen. They were right on top of Tucker's house. They were huge lightning bolts.
Yeah, we had a few trees knocked down. Power was out for about 30 hours, I would say.
Oh, you had power out for 30 hours?
Oh, yeah. Oh, that happens all the time.
So you didn't come into work. I mean, that's a good, work from home. Is that how that worked?
No, I went to the beach.
Okay.
I thought the choice was obvious.
Okay, here's a single sentence. This goes off Brad Stone and Anna Rascoway's tour de force. Lisa, I didn't understand that LVMH owns Sephora. Quote, Sephora achieved another historic year as Lisa Mateo darkened the door numerous times. They write in an end-of-year report a revenue increase of 25%. What is it like when you walk into Sephora of LVMH?
Sephora is a lot of young kids, which I didn't even realize. A lot of the younger kids are the ones who are buying up all the products that I need.
Including the $317 line item I saw on the charge card
their moms and dads just buy them up.
Daughter tag team is always more dangerous than a single daughter. Sephora, LVMH. Thank you, Anna Rascoway. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got a mix of red and green on the screen. The green coming from the NASDAQ, up about 0.5%, 86 points, 17,584. The S&P 500 up 0.1%, 9 points, 5,457. The Dow down 0.1%, 65 points, 39,345. The two-year yield 4.74%, up 1 basis point. The yield on the 10-year 4.25%. That's up 1 basis point. We have spot gold lower, $2,332 an ounce. Brent crude $85 a barrel. WTI crude $81 a barrel. Checking in with shares of Carnival Cruise. Looks like more people are hopping on cruises. The company swings to a profit. Wall Street analysts expected a loss. Those shares up about 6%. From cruises to planes, we go to Airbus. Their ADR's down nearly 6%. It lowered its guidance due to supply chain issues. And finally, shares of Spirit Aerosystems falling down 5%. Reports that Boeing switched its proposed funding from an all-cash offer to a deal funded mostly by stock. Boeing down about 1.5%. That is your Bloomberg Business Flash. Tom.
Thanks so much. Okay, the way this works is you have a normal presidential debate, and like a building away or off to the side will be the media, and they're hanging out and they're wishing they were at Bar Margaux of the Four Seasons Hotel Atlanta. Except this time around, there can be no one there. So we're just assuming David Gura will give us team coverage from the Bar Margaux at the Four Seasons Hotel in Atlanta. You and I could literally have lunch over a gimlet on this.
Also at Bar Margaux.
What a strange debate. How do you've got experience here. How do you approach it?
It'll be strange. It harkens back to the debate in 1960, and Mark Thompson, who runs CNN now, has been very clear about that. He wants to return to the sort of Kennedy-Nixon style intimate debate on a stage without the presence of an audience. And we're going to have the moderators of the debate, Dana Bash and Jake Tapper, with the ability to mute the candidates while each other is speaking. It'll be very interesting to see how each feeds off that lack of audience, if that makes sense. We know of Donald Trump, the former president, and how he loves to speak to big crowds, how that animates him. This will be an entirely different thing to be in this studio at CNN's new old headquarters in Atlanta, in a room with just the moderators and his opponent with President Joe Biden.
Help those of us not at the speed on this, which includes me. Is this the debate of the season, or are we going to do this again?
Two are on the schedule. So CNN has this first one. ABC has one in September. It is the earliest one that we've had. So we're still weeks away from the political conventions, of course. That makes this interesting. And then for a long time in this country, we have had a debate commission, a nonpartisan group that arranges these debates, puts them on, does them without commercials. That has now become a vestige of the past. And so this is now up to CNN to determine how it unfolds, and the candidates have bought into what CNN has laid out for them.
My summary of this, and I do think it's in the zeitgeist, is this is so canned and so prepped that they're going to have a question, and it's going to be inflation, whatever the question is, and all we're going to get is talking points. Is this going to be a talking points rehearsed debate?
I think that there will be some of that, of course, and the president has been and is at Camp David outside of D.C. preparing for this. We don't really know how the former president, Donald Trump, is preparing for it, but there was a fascinating piece in the New York Times today by former Secretary of State Hillary Clinton, who has, of course, debated both of these men. She debated Biden back in 2008 during the primaries and debated Donald Trump in 2016. And she picked up on what you're talking about, Tom, and that is you don't really know how this is going to go with Donald Trump, and it's hard to prepare for and base a debate performance on a genuine debate over the facts. I think what's yet to be seen here is how much the current president will be able to sort of ride those facts, stay on them if there are interjections by or diversions by the former president during the course of this.
But if his mic is off, I'm lost on this. Just to pick one of them, President Trump is saying things that are not accurate according to President Biden. Can President Biden come in and say, like in the normal debate that you and I had years ago, oh no, I don't take your, like debate, Lisa, did you do 7th grade debate?
I did not. I was playing basketball.
Lincoln Douglas style.
You and I flunked it, and Gura got an A+. It's in school in North Carolina. There's not going to be a normal back and forth.
No, we remember from the last debate between these two men that kind of shut up moment where Joe Biden interjected and told then President Trump to be quiet on stage. That can't happen this time around. So, if you're Donald Trump and I ask you a question, you've got 2 minutes to answer it. I then would have a minute to respond, and the moderator has discretion to ask either of us to respond in another minute. But you won't have that kind of extemporaneous verbal action. I do think that, if you go back to that debate between Donald Trump and Hillary Clinton, there were so many moments when, say, Donald Trump walked around the stage, stalked around the stage. We'll see sort of what kind of physical moments there are. Maybe they move away from the podium.
And folks, you got to understand how twisted Gura is. He reads 538 polling results to his children when they go to bed.
They love it. They really love it.
What portion of America for David Gura is undecided? I'm voting for Trump. I'm voting for Biden. I would suggest the group in the middle is pretty small. Am I right?
It's a very slim section of the population. I think the big question is who's going to come to the polls. I think a big thing that certainly the incumbent president is worried about is who's going to show up on Election Day. I think the appeal here is to make the stakes clear to the electorate, make it important for them to go to the polls in November. But you're right, we have kind of a calcified electorate in this country. There was a lot of speculation after the guilty verdict here in New York. Would that change markedly the former president's base? We haven't yet seen that dramatically in the polls.
Smart question here on YouTube. Thank you for the live chat on YouTube. Gura doesn't have that on the big take. We have it here. Here it is, David. Will CNN have real-time fact-checking as they cut off the mic?
It is a great question. No, they will not. And we've heard the moderators and read comments from the moderators in press ahead of this debate saying, look, their job is to have facilitate as civil a conversation as they can. This will appear on CNN, Bloomberg Television, Bloomberg Radio, across many different media platforms. CNN has said they will do fact-checking immediately after this 90-minute debate concludes. But Jake Tapper, Dana Bash won't be in the moment saying, that's not true. Here's why. Here's an example why.
Sparta just emails in. He says, Tom, shut up about the debate. What are we doing on the big take? Our sterling podcast of 20 minutes every day is different.
Well, we have a great episode coming out today. I spoke with Brad Stone and about his interview that he did with Bernard Arnault, the head of LVMH.
Really cool.
And it's a rare thing to sit down with one of the richest men in the world. Brad did, and that'll come out this afternoon. And then I go to Atlanta tomorrow, so I'll be appearing on radio and television, YouTube. Of course, doing a podcast from there as well. Our hope is to turn one very quickly after this debate concludes, involving our bureau in D.C. and
you
reporters
can go
through
full
there.
circle. You can shop at the Louis Vuitton store in Atlanta. You could look. I saw Shaq one day on Central Park South with the $8,000 Louis Vuitton bag that Audrey Hepburn had in charade. I could see you with that.
I was going to say, he wasn't buying a suit off the rack. No. Shaq wasn't able to do that.
No.
Yeah.
Did you hear they're going to tear down the Louis Vuitton building at 57th and 5th Avenue?
It's a tower. They're going to remake it.
They're going to tear it down.
Wow.
I think.
I haven't been in the Tiffany. I know you've been in the Tiffany store. You're taken there under duress often. I haven't been yet. I hear the one here, not this week. The line of credit still stands. And I know you anyway.
It's a national line of credit. David Gura, thank you so much. On his way to Atlanta. He'll be at the Bar Margot for the debate.
I can join you from there if you want. Just give me a call.
Get a remote there, 9 p.m., 10 p.m. over the Gura Gimlet. David Gura, thank you so much. And look for the big take. Seriously, folks, some important work. Anna Rascoway and Brad Stone on LVMH and Mr. Arnault. Really, really informative chat about some of the acquisition tendencies of Mr. Arnault. And then on to the debate. As well that we will see. We turn to the heat in New York, a little less heat wave here. We go to our Bloomberg Surveillance congestion reporter. I mean, the trains are running, right? I looked and I don't see Amtrak delayed.
There was one that was canceled, one train, Amtrak train. I don't recall because I don't have my screen up in front of me.
Well,
I didn't know I was now the.
Do you still take the ferry? Are you still taking ships? Boats to work?
No, I will take the ferry into New York City when the hours permit me.
I see.
There's
pre-dawn is tough.
There's no 2:30 a.m. ferry.
Surveillance dinghy up the Hudson.
You could shut down on the deck. Last call.
I have made the very last boat out of the big city.
Yes.
Thank you. Your ferry report from Atlantic Highlands with John Tucker. We say good morning to all of our good friends at On Deck. We're doing this for Mike Wilson. He says the stock market's like 1965. And David Gura remembers the important popness of 1965. Charlie Pellet's favorite, Petula Clark.
much brighter there. You can forget all your troubles, forget all your cares, so go down.